Good morning, everybody. Buenos dias. Dave's trading. Freddie, Dwight, nice to see you. Jim, good to have you. Ron, always good. Alex, Charles, David, Dan, Luciano. We got the whole crew here today. Nice to see you guys. Hope everyone's doing well. Hope everybody enjoyed their long weekend. You got a break from me on Monday. Always a good thing. Not have to listen to me say the same darn thing every day. Um, Hey, good morning, Charles, Freddie, Luciana. Nice to see you guys back in here. Dun, 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 dun. What is it? Today's Tuesday. It's not Monday. I have driven 22 hours in the last 3 days, and I'm excited to be broadcasting from Amarillo, Texas this morning, Central Time Zone. 9 a.m. Eastern, but it's only 8 a.m. here, so no more waking up at 4:30 in the morning for me, guys. Hope everyone's doing great. Thanks, Charles. I'm excited about the week. Excited, really, just to get going. Rode a Longhorn. Don't we did the covered wagon? It was definitely Trail of Tears. Jose, nice to see you back. How was vacation? Hopefully, it was great. Had a good time, relaxed, ready to do what you got to do, get it done, right? Great and short. 2 weeks is a short vacation? I guess it can be. That's all right. 2 weeks is about all I can handle vacations usually. Guys, let's do what we do every day. Let's take a look at the news. Today is Tuesday, the 10th of October. There is some final wholesale inventories at 10 a.m. That's a low impact news. Not too terribly worried about it. At 1 p.m., FOMC, excuse me, Waller speaks. Wow, that was a big yawn. I apologize. Congratulations, Gary. Guys, I'm going to tell you right now, hey, D-Rock, I have had 2 private messages, and then, Gary, you are the third person to tell me that you're getting funded. So, guys, keep killing it. Keep killing it. Guys, check in news each and every day, making sure that you're not trading in front of something that can create a huge response in the market. Because when news releases, people react, right? The people that move the market react. So today there's not a whole lot going on. David Bout, you're going into your eval on Monday. I like it. Man, guys, keep killing it. Can I say one thing, though? And I think Ron used the phrase, dance with the girl that you brung, right? So, guys, if you follow a plan to get funded, don't deviate from your plan when you get funded. Don't change the approach that made you successful. And I'm going to tell you right now, if you do, your results are probably going to be a little different. So, guys, focus on that consistency. And that's what we're going to do today. We're going to talk about consistency. We're going to talk about the same thing that we talk about every day. I'm going to go to the tutorial section off the education page. And guys, everything that you need to be successful is right here. There really isn't anything outside of what I say in this classroom that you need to be successful. Are there a million other ways to do it? Absolutely there are. There's so many different trades to be had, so many different looks to be taken advantage of. But to be honest with you, is you don't need them in the beginning, guys. What you need in the beginning is the high probability trend trade. Because a high probability trade means that each indicator on every chart agrees for the trade. Guys, this is going to be your strongest triggers. This is going to be nothing between you and your targets. This is really going to be the best of the best. Everything that you look for in a trade, all the advantages that you can have. That's what we're going to talk about for the first hours. We're going to lay some foundation work down. Because this high probability trend trade teaches you to be a chart reader, guys. It teaches you to be able to read your indicators, to take this amazing software and translate it. And once you can read your chart, you're going to understand some pretty key concepts. You're going to understand where the market is likely to continue. This becomes your entry point for high probability trend trades. You're going to understand where the market is likely to go. Using this concept is going to help you pick better targets. It's going to help you make more out of these great trades. And then understanding where the market is likely to stop. Very often, it's where the market is also likely to go. But it's a giant red flag. This is where trends end. This is where markets reverse. These likely to stop areas are what we call termination conditions. And termination conditions can stop the market cold in its tracks. Termination conditions are where the people that move the market are reacting, where the buyers are buying more or taking profits, or the sellers are taking over. So you're going to be able to recognize these likely to stop areas and make good decisions about whether or not you trade into them. So three three concepts for the high probability trend trade, guys. And the high probability trend trade is only three rules. And the three rules, each rule creates an advantage, guys. So we're talking about every chart, every indicator agrees for the trade. These three rules will give you the advantage of momentum. They'll provide you the advantage of a clear path. And they're also going to give you the advantage of an entry area, that point where the market is most likely to continue. These three rules, and let me give you a copy of them. And don't worry, I'm going to give you copies of these all day long. These three rules are going to happen on only two charts, guys. That's it. Simplicity is the idea. Simplicity, keeping it as basic as you can. The large chart is going to define direction. It's going to define momentum. And it's also going to define your areas. And let me make sure that my earbuds are connected. This should make the sound even better. See, does that sound better? I hope so. I had my phone in the same room with me, and I think they connected to my phone. Guys, your large chart's going to give you so much information just from the first bar of the large chart, the most current bar. It will define direction, momentum, the areas, and it's a broad stroke of a brush. Awesome. I realized that my phone was sitting there. I was like, man, I bet you my AirPods connected to the phone. Um, and this broad stroke of a brush is really the overall opinion of the market. It's telling you what the people in charge want to have happen. So we're going to use that large chart to have our first two rules met for the high probability trend trade. Rule number one provides that advantage of momentum. Rule number two is going to give you the advantage of a clear path, nothing between you and your target. And then once those first two rules are met, once these two advantages are in place, hey, Miss Debbie, you're going to turn your attention to a smaller, faster chart. You're going to take that broad stroke of a brush and you're going to refine it. And it's pretty amazing because what happens in that first bar, that most current bar, on the large chart, you're going to be able to refine down on the smaller, faster chart. Let me show you exactly what it looks like. This one bar defining direction, momentum, the areas, is going to be broken down into approximately 15 to 30 bars, where next-gen users are going to identify where the market is likely to continue. And it's this refinement process on the smaller chart that's going to help you reduce risk. It's going to allow you to maximize your profit potential. And you never even look at the small chart until the rules are met on the large chart, until you have the advantage of momentum, the advantage of a clear path. So this is going to be our focus for the first hour, and this really is the focus for every first hour. Every first hour of every classroom, we talk about these rules, we talk about these looks, we identify these advantages, and you're going to learn the trigger line and Fibonacci rules for when it's okay to trade. Your goal should be, in order to enter the market, my rules must be met. And if my rules are not met, I'm simply going to sit on my hands and do nothing because I don't have a statistical advantage. I need you guys simulating each and every day. Pull the trigger, right? Don't be scared to pull the trigger, guys. It's okay to make mistakes. You may stumble into something that just feels comfortable. But get out there and simulate. You can't lose money on simulator, guys. Nobody's going to repo your sim house or your sim Ferrari. And then posting pictures in class until you're sure that you have the correct rules. Every time you post a picture in class, I want you to write your rules on the chart. And guys, it sounds like I'm just being nitpicky, trying to give you busy work, but the reality is, Every time you write your rules on the chart, every time you draw an arrow to what it looks like, you're reinforcing, you're solidifying the look. This is what I'm looking for. This is the rule associated with it. This is the advantage that has me looking for a trade. I see a lot of people posting trades in the room, and they put stuff like darn or missed me or heck fire, right? Whatever. But they're not writing rules. And you'll find that the more you break the rules, the less you're inclined to write the rules on the chart because there's that little bit of, oh man, I messed it up. I want you to mess it up. But I want you to know that writing your rules on the chart is going to increase your consistency, guys. Show timestamps. Absolutely. So you capture the chart, Charles, and then once you capture the chart, that's where Capture gives you all those great tools to come in and write on the chart, to draw those arrows. If you want me to go through it once, I'll be happy to. And we're going to show time frames, stamps, and making sure that you're showing me entries and exits. So how you annotate a chart is going to have a lot to do with the feedback that you receive. The more information you give me, the easier it is for me to talk about what went right, what went wrong, what we can do better to get to where you want to be. So you're going to simulate. You're going to try to always practice the correct rules, guys. Don't be one of those people that's like, oh man, it's just simulator. I'm going to jump in here and jump out there because what you're doing is you're creating this muscle memory for long-term failure. We're going to simplify today. We're going to keep it on that high probability trend trade initially. That's the trade where every indicator on every chart agrees for the trade. That's where you have the best of the best, right? And then that is going to lead you into a medium probability trade. And a medium probability trade, hey, good morning, Ed. Nice to see you in here. A medium probability trade is when most of your indicators line up for the trade, but a small issue exists. The reason the medium probability trade, good morning, Snorri, is the second trade is because it's your chart reading that's going to have you recognizing the potential problems. Um, when you execute medium probability trades, you're going to have to manage them assertively. Your ability to read your charts is going to allow you to manage them assertively. If there's trouble in your way, once again, here we go. That chart reading is going to help you identify your trouble, and it's going to allow you to take quick profits to get to a zero loss level. So we're going to focus on two trades today, but we're going to start with the high probability, and then the skills that you develop through that high probability trade are going to open a million doors for you. Um, you're going to you're going to be able to determine what it is that you're going to commit to. And then the idea is that you're going to learn the looks, guys, so that they become easy. And that's where the repetition comes in. I'm going to tell you right now, without any hesitation, you've just stumbled into the best software in the world. The only thing that Nexgen can't provide you is experience. That comes through your simulation. That comes through your practice. That comes through your questions, and through the pictures that you post. And the step-by-step path to becoming a confident trader ASAP, guys, it starts with posting your trades in the room. This is very daunting if you're shy. This is terrifying if you've made a mistake. I'm going to tell you right now, guys, I try to celebrate victories 100%. Every time you post in the room, I'm going to search for what's right before I ever look for the mistakes. We're going to build ourselves up, and then we're going to correct problems that might be costing you money. And then tracking your real-time performance in a spreadsheet. NextGen provided you the spreadsheet, guys. It's in your NextGen Study Picks folder. Your first page of the spreadsheet it's just a trade journal. That's all it is. This is what I did today. These were my results. These are the notes that I annotated on my chart. This is what I did great, right? This is what worked. You're going to ask yourself every morning when you study it, what worked? What didn't work? Um, and the idea is through repetition, we begin to repeat the positives and eliminate the negatives. What felt easy and kept you relaxed? Some of you are like, there's no way I'm ever going to feel easy when I'm day trading, right? This stuff is so anxiety producing, but it's not. It's your uncertainty, it's your lack of repetition, and you're in a developing trust stage. Eventually, following your rules is what keeps you feeling easy and relaxed. And then breaking your rules, right? Trading into problems, jumping into the market. That's what's going to make you nervous. But this brief historical study each and every morning, it will prepare you for the day and it will accelerate the learning. Guys, set aside 5 minutes every day. 5 minutes, drink your coffee, let your charts load, check your news, and look at what you did yesterday. Your spreadsheet, here's my spreadsheet. First page, all of your tracking. Second page, everything. David, no. There's your answer. Nope. That's just bid and ask. Don't even worry about it. Doesn't mean anything. I mean, it means something, but not in regards to your rules. Your second page, guys, this is where when you follow your rules, when you have those advantages, take a picture, put it in here. Your personal trade setups, right? This is your plan. What it's going to take to get you in the market. I'm going to give you the rules. NextGen's going to provide you the software, but the plan has to be yours. And then this is about 250 pictures of clients using the software, embracing the advantages, taking great entries, learning to manage. This is great for you to go through and study and just take a look at, see what's going on with the software. And as you learn the advantages, you're going to recognize that most of these pictures revolve right around those advantages. So I'm going to give you my spreadsheet first. You can have it, use it, steal it. Good morning, PFI. Um, you guys are going to post your trades in class. I'm going to spend the next 45 minutes talking about the high probability trend trade, talking about the advantages. The first hour is dedicated. It's more of a lecture than a discussion. But the second half of class, guys, or the second and third trimesters of class, they're going to revolve around. You see a lot of people posting pictures in the room. I'm going to go back and look at everybody's picture. And I'm also going to revolve everything that I talk about around these advantages. So, subtle reminder, guys, if you're not writing your rules on the chart, if you're not telling me why you did what you did, you're not going through the whole process. Help me give you the best feedback, please, by writing your rules on there. And then we're going to talk about the high probability trend trade. We're going to focus on these three looks. We're going to understand what they look like, what they mean to us as traders, and how to recognize them in the moment. So we're going to start with the large chart. The large chart leads the way. The large chart defines momentum, direction, and areas. And we're going to let it define momentum first, guys. And the large chart defines momentum with strong trigger lines. In order to have strong trigger lines, the only way that it can be done is you have to trade with the trend. So let's identify trend real quick. This is for you newer users. This really is how easy it can be. If the background on your large chart is green, you're in an uptrend. If the background on your large chart is red, you're in a downtrend. And what that means is you're only looking for rules to be met to be trading in the direction of the large chart. And this is how easy it is. You ready? Guys, this is your S&P. Are we in an uptrend or a downtrend in the S&P? What do you think? New users, help me out here. You guys have been with me for a month. Charles, exactly, guys, it's an uptrend. We're only looking for rules to be met for high probability trend trades long. What about crude oil? Uptrend or downtrend? What do you think, guys? It's an uptrend. Isn't it awesome? Now you're focused on only trading with the trend. And once you're trading with the trend, we're going to look for those strong triggers. We're going to look for the advantage of momentum. Remember, guys, it's the most current bar on your large chart. That's all it takes. And strong trigger lines mean that your small triggers, let's blow that up. These small triggers, which are your solid lines, are above the large triggers, these dashed lines. But not just above. Both are wide and they're angled in the direction of the trend. So in this uptrend, my small and my large are both up. They're both spread wide, not flat and lifeless, but wide and angled in the direction of the trend. And then it's that space between small and large that lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. You're going to hear this in the room all the time. Hey, good morning, D-Soap. Odds favorable momentum means the market's likely to continue in the direction of the trend. So that separation, like scissors, open, prepared to cut, this is your best of the best look, guys. This is that rule number one advantage of momentum. In a downtrend, the smalls should be below the large should be wide, angled in the direction of the trend. Once again, not flat and lifeless. When they're both wide and angled in the direction of the trend, the space between the two, like scissors ready to cut, this is when the odds are favorable for the market to continue in the direction of the trend. Guys, odds favorable momentum is your best of the best look. And when you have it, it's the most favorable look to buy pullbacks to Fibonacci support on that smaller, faster chart, or to buy pullbacks to Fibonacci resistance on that smaller, faster chart. You're going to see these tails on a large chart. If you scroll back, you're going to notice them. These tails on one bar on the large chart are 15 to 30 bars on the small chart. You are going to be able to recognize where the bottom of that tail is most likely to happen. And when you do, that's going to become your entry for the highest probability trend trade. So strong trigger lines, guys, space between, wide, angled in the direction of the trend. Let's go back to the live market. The trend is up, but my triggers are down. I can't possibly have momentum because the small are above the large, but they're red. There is no momentum present. And then here on the S&P, my large triggers are flat and lifeless. So even though the smalls are above, it's too soon to call it odds favorable momentum. You'll notice right behind it, though, there's that odds favorable momentum. There's one of those tails, and the market pushed down. So I'm going to ask my new users, is everybody comfortable? This is your first advantage, guys. This should lead the way because this is the best of the best look. This is what's going to set you up in a market that's likely to push. Give me a Y in the room if you're with me. Odds favorable momentum should be the first thing you look for every time. Odds favorable momentum is even going to help cover some mistakes. So if this is strong and this is likely to continue, here's the opposite. Weak trigger lines. When the small triggers break inside of the large trigger lines, we call this a weakening of the large triggers. So think about it. Scissors are open. Momentum's the strongest, ready to cut, get some work done. Scissors close. Smalls work inside. Now I have weak triggers. And when I have weak triggers, anything can happen up or down. Notice that those weak triggers precede a reversal in the market. Guys, this is both sides of the coin for brand new users. Odds favorable should lead the way. Odds favorable is momentum. Odds favorable is the best of the best. Anything can happen. You've taken that advantage out of the equation. It can no longer be a high probability trend trade. It no longer fits that recipe for a trade that typically wins 70 to 80% of the time. And then with those weak triggers, what would have been a tail with those odds favorable momentum turns into a reversal bar and the market goes the other way. 90% of your day is reading indicators. 90% of your day is spent waiting for advantages. Charles O, did you get that OFM chart? I dropped it down in there for you. Rule number 1. Strong triggers on the far left turn into anything can happen triggers. With those anything can happen triggers, check it out, guys. The market reverses. It could have gone up or down, chose to go up. And then after the reversal, I get smalls above the large. The large are wide. They're angled in the direction of the trend. There's one of those tails on that larger chart. That's that refinement process. On a smaller chart, Nexgen users know exactly where that tail's about likely to happen. That becomes the entry for the highest probability trend trade. And look how far it goes. Right up until those scissors close. Back to weak triggers, precedes the reversal. From the reversal, odds favorable. There's a tail, down it goes. And then guys, this is the point, and I want you to see this. Both triggers down in an uptrend. Doesn't that sound familiar? Didn't we just see that? Both triggers down in an uptrend. Larger down, smaller up. Guys, this is moments of indecision. This is where buyers and sellers are battling. Very often it happens in between Fibonacci areas, but you can't have odds favorable momentum if your triggers are red in an uptrend. And you can't have odds favorable momentum if the triggers don't agree, if one is up and one is down. This is where a lot of traders try to predict what's going to happen in the market. This is where traders say, well, the background's green, so I'm going to go long. And they go long 5 or 6 times, and they keep getting stopped out. Or they say, well, my triggers are red, so I should probably go short. They're forming an opinion rather than waiting for the advantage of momentum, guys. Rule number one is designed to keep you on the right side of things. Rule number one is designed to keep you in a market that's likely to push in the direction of the trend. If you can convince yourself that rule number one is the only way you're looking for a trade, you won't get caught up in these little opinion moments. Let them fight it out. These are the forces that move the market. Eventually, one of them's going to win and give you that odds favorable momentum. So guys, that's rule number one. That's the advantage of momentum. That's using the large chart to determine when the market is likely to continue in the direction of the trend. Once we do that, we've got to make sure that we have a clear path. Rule number two is designed to keep you from trading into an area that may reverse the market, that may stop the market, that may create a bounce that becomes untradeable. And rule number two says that termination conditions are false. There has to be room to the profit targets. Termination conditions are just Fibonacci areas that may reverse the market. Let me drop this one in the room for you. If you're brand new with me, this is your roadmap to what you're looking at. And these are areas where decisions are made. And I've found personally that when I consider them areas where decisions are made rather than fibs or divergence highs, when this is where the sellers may take over, this is where the buyers may give up, what it does is it reminds me that I'm not in control. Areas that may reverse or create a bounce, you want that other rule number one? Charles getting the study done. I love it. Ask me for everyone. I'll give every one of them to you. Um, Areas that may reverse the market that may create an untradeable bounce, guys. Divergence highs and lows. These magenta and cyan lines that are going to print from a pivot when the market's losing momentum. That's all divergence means, guys. I had no idea until I started with Nexgen. Divergence means loss of momentum in regards to what we do. We're also going to look at red Fibonacci resistance and blue Fibonacci support, yellow one-to-ones, and then in some cases we're going to look at these mid bands. But the idea is that in order to determine a termination condition, two things have to happen. The first thing that happens is that price reaches an area. Let me get back to the termination condition section. Price reaches an area, meaning that when I say price, I mean these dynamic Renko bars on your large chart. The dynamic Renko bars are a reflection of price. That's all they are. Price goes up, price goes down. You see it in the form of the bar. When the bars reach, in this case, Fibonacci support, prices reach the area. Because prices reach the area, now the people that move the market are forced into making decision, whether they're going to take profits, whether they're going to let it run, or maybe the opposing force says, this is exactly where I want to unleash the hounds and push the market up. You don't have any idea what's going to happen when price reaches the market. So it's imperative that you sit on your hands. Price reaches, and you're going to look at your T3 trigger lines, the same ones that provided you momentum. If you reach a low, Fibonacci support, and the triggers remain above, absolutely no more shorts into that area. It may reverse the market, it may create an untradeable bounce, or it may break. We just don't know. But that's your recipe for determining termination conditions. Price reaches the area. If none of the triggers break, you don't have a clear path. The area is not broken. An area is considered broken when both the small triggers and the large triggers get beyond the area. So if we look at this area of support up top, price reached it, and both small and large remained above. Price breaks through, but that doesn't really matter, right? Now we're looking at trigger lines to determine whether or not an area is broken. The small triggers break through with odds favorable momentum. This blue line has the potential to break, but it's not broken yet. The path still isn't clear. But when both the large and the small get to the other side of support, now support is broken. It begins to behave as resistance. Small and large clear an area. The area is broken. The path is clear. Notice that we also have that odds favorable momentum. And notice that there's also one of those tails right at resistance that's used to be support. Next-gen users, this becomes your entry with odds favorable momentum and a clear path. And with all that momentum, you can identify where the market is likely to go. So we're going to use termination conditions, guys, to keep us safe. And we're also going to use them as an anchor for the highest probability trend trade that you can take. So price comes down, hits support, triggers break through. Support is not a termination condition. The triggers start to get through, and then the buyers take over and push up, guys. This pivot has a loss of momentum. I know that it does because the cyan line printed about the third bar up. This is not a termination condition because the recipe for a termination condition begins with price reaches the line, not creates the line. Over here, where your dynamic Renko bars come down and they hit price and they exceed it a little bit, but notice how your trigger lines remain above that divergence line. Price reaches the area. Where are my triggers? My triggers are above. No more short trades into this area. It may reverse the market. It may create an untradeable bounce, right? Or it may break, but in the moment we don't know. This is what we call a pivot stop out of a prior divergence high. Or low, excuse me, divergence line. Price reaches, triggers remain above, no more short trades. This is a termination condition. If this termination condition creates a full reversal, we're going to call it a strong bottom. A strong bottom is the precursor for the highest probability trend trade long that you can take, guys. That trade that typically wins 70 to 80% of the time. These pivot stop outs happen a lot. They happen all day, and they're powerful. But they become even more powerful when they coincide with Fibonacci resistance. This is the picture that I absolutely love to share with you guys because it reminds you 90% of your day is going to be spent waiting for advantages, guys. So over here, let me change that color. Let's go black. Over here, price is pushing up. The trend is up. The triggers are up. Everything says up. And then price reaches Fibonacci resistance. When it reaches Fibonacci resistance, none of the triggers break through. Guys, this is a textbook termination condition. Give me a Y in the room, new users, if you're with me. Price reaches the area. Absolutely no triggers break through. No more long trades, guys. Keep yourself safe. Don't guess, don't hope, don't wish. Notice how resistance pushed the market all the way back to Fibonacci support. When it reaches Fibonacci support, none of your triggers break. Sit on your hands. Do nothing. You don't know what's going to happen here. And they're weak, right? So double whammy, right, Charles? Not only do you not have odds favorable momentum, but you've also traded directly into an area that may reverse the market. Guys, I'm telling you, not trading into areas that may reverse the market is going to keep a lot of money in your account. You don't make any money not trading, but you also don't lose any trading into areas that may reverse the market. From support, notice how the large triggers never followed, so much so that there was room for a reversal bar. Guys, this is what we call the gap theory. When price accelerates from the large triggers and reaches an area, and the large triggers remain a full bar away, under no circumstances do you trade into the direction of the trend until that gap is closed, because it acts like a vacuum and you're more likely to get stopped out of a short trade hoping that it goes than just sitting on your hands and waiting for the reaction. The reaction here was once again price reaches Fibonacci resistance. None of the triggers are capable of breaking. That's a termination condition. It also reaches that divergence high. None of the triggers break. There's another termination condition. It also reaches that second level of resistance. No triggers break. No long trades into this area, guys, even with green triggers. This is a pivot stop out of a divergence high. That's a strong termination. It's also two areas of resistance. It's making it even stronger. And guys, when this termination creates the reversal, large go to red, small below, and there's a clear path with separation between the two. Guys, this termination that creates a full reversal is a strong top. Strong top is the precursor to the highest probability trend trade that you can take. There's your little pullback on a smaller, faster chart, and that's the one that typically wins 70 to 80% of the time. Guys, 90% of your day is waiting for that best of the best to give you a statistical advantage each and every time you enter the market. Let's see if we can find any instances of termination conditions holding the market. This is crude oil. Price reaches support, none of the triggers break. Look at the bounce. Price reaches resistance, none of the triggers break. Back to support. Back to a pivot stop out. Back to support. Guys, rule number 2 kept you out of the consolidation, waiting to see what that market was going to do. Rewind a little bit. There's odds favorable momentum. There's one of those tails. There's the clear path all the way up to the next termination condition. And if you back up, you're going to see it a lot, guys. Rule number 2 keeps you safe. Triggers don't break, no shorts, no longs, no shorts, no longs, no shorts, no longs. You ever been chewed up in consolidation, you guys that are coming to Nexgen, where maybe you have had trading in the past and you're like, oh my gosh, I went long and short 10 times and I didn't win any of them? Rule number 2 keeps you out of it for an hour and 45 minutes. Rule number 2 doesn't give you a clear path, keeps you from hoping resistance breaks or hoping that supports breaks. So it happens all day. Price is reaching support right now. All of your trigger lines remain above. That's a textbook termination condition. You just have to practice so that you can recognize it in the moment. Price reaches divergence high. None of the triggers break. No more long trades into the area, guys. And I'm going to show you another one, and we're going to draw this up. Why does rule number 2 keep you safe? Why is rule number 2 designed to keep you patient, to keep you waiting just a moment? Because Fibonacci areas are where decisions are made, guys. The sellers are in control. The sellers have odds favorable momentum. The sellers smashed through this area of support, and then they reached these yellow 1-to-1s. And when they reached the yellow 1-to-1s, there was a whole crew of next-gen traders that said, none of my triggers broke. I'm going to sit on my hands and wait and see. Either the sellers are going to push through it like they did the previous level, or the buyers are going to fight back and reverse the market, or there's going to be a fight that I don't want to be caught in the middle of, guys. And this is one of those fights. From support, the market pushes up. All my triggers remain below resistance, and the sellers push back, and the buyers fight again, and the sellers punch back, and the buyers go after it, and the sellers do again. And finally, the buyers get all the triggers above resistance. It behaves as support. Finally, the buyers create momentum. Finally, there's that little pullback, taking you to the highest probability trend trade, guys. The highest probability trend trade that you can take is the trend trade that happens after a termination that creates a full reversal. There's never any reason to get caught up in these moments, guys. Doing absolutely nothing is the hardest thing that you'll ever do, but doing absolutely nothing costs you absolutely nothing. If you hoped this termination would push it up, the sellers stomped you 5 times. And if you hoped that the sellers were going to remain in control, the buyers took the wind out of your sails about 5 or 6 times as well. So, guys, this is a great reminder. 90% of what you're doing is sitting on your hands, waiting for the advantages. There's your 90% right there. 10% of what you're doing is pulling the trigger when the advantages are present. Is everybody good with that? Guys, this is terminations in an area. They happen at highs. There's one of those divergence highs, not a termination. When price reaches it and the triggers remain below, now it's a termination. All triggers below resistance, termination. All below those 1-to-1s, termination. Guys, I'm going to put this picture in the room and it's got the recipe. Price reaches, triggers remain below. That's all at highs. Well, the same is true for lows, right? Just go in the other direction. Price reaches, no triggers break, sit on your hands, do nothing. Embrace the idea that you don't know. Embrace the idea that you're not in control. Let these guys make decisions, right? Look at the reaction. No triggers through. No reason to get caught in that. Look at what's happening on your smaller, faster chart at this key area. It's untradeable. Why bother trying, guys? Give yourself the advantage. There's one more termination condition that I want to talk about, and it's not a large chart termination. This is the only termination that I'll look for on a smaller, faster chart. You're going to be able to use it on a smaller, faster chart. Remember that one bar on the large chart is 30, on the smaller, give or take. So sometimes your large chart has a clear path but reverses. Sometimes it has odds favorable and a clear path but reverses. This final termination condition, guys, this is going to allow you to recognize that change by using the smaller, faster chart and by using those divergences, that loss of momentum. 3 divergences in the same price range may terminate the trend. Really pretty easy. If you see that cyan line print 3 times from a low, sit on your hands. The market may push up. If you see that cyan line or that magenta line print 3 times from a high, do nothing. The market may push down. Guys, 3 divergences from a low, 3 divergences from a high can stop the market. When your trigger lines turn into those anything can happen triggers and you have 3 divergences, it becomes even more powerful. And when you have anything can happen triggers and 3 divergences, and that third divergence is higher than the previous from a low or lower than the previous from a high, it becomes more powerful still. Guys, you're going to see this look on a low and this look on a high when your large chart's changing direction, but you can't see it yet because it is a slower broad stroke of a brush. You're also going to be able to use these 3 divergences. Whoops, that's the wrong picture. To help you manage trades as you begin to work on a management plan, guys. If you're in the perfect short trade, if you entered right where the market was likely to continue and 3 divergences print, guys, that's your giant red waving flag that says things might be changing, your trade might be over, let's collect some profits, sit on our hands, wait for the advantage. So 3 divergences in the same price range may terminate the trend, right? Notice that these 3, 4, 5 divergences in the same price range corresponded with a termination condition on your larger chart. Crazy, isn't it? And watch this, just because it's a kooky, crazy world, even with odds favorable momentum, 1, 2, 3, 4 divergences, said Nexgen users sit on your hands. We're going to wait for a second and see if the buyers or the sellers end up winning. And you notice how they appear to be caught between areas? It's all right to let those areas break to get both sets of triggers to the other side before you start guessing. So guys, termination conditions or lack thereof is going to give you a clear path. It's going to make sure that you have the absolute clearest path between you and your target. And when you couple that with odds favorable momentum, you're setting yourself up for success, guys. You're setting yourself up for the absolute best of the best. So as a brand new user, if no triggers break through the area, sit on your hands and do nothing. Wait for the reaction. Wait for both the small and the large to get through the area so that the path is clear. These are your first 30-day options, guys, as you focus on the high probability trend trade. That medium probability trend trade that I told you about, guys, that medium probability trade where most of your indicators agree, that's this picture in the center. This is what we call a 50-50 look. It has nothing to do with your chances for success. It has everything to do with the look of your trigger lines when price had reached the area. Small trigger lines have broken through 69.80. They're above the area that we're wondering if it's going to hold or break. But the large triggers have remained below. 50% above, 50% below. Pretty clever, right? Call it a straddle trade if it makes you feel better. Call it a one above, one below. But the idea is that with odds favorable momentum, when the small triggers break through an area, that area has the potential to break, but it is not broken because the small and large haven't cleared. Guys, this is going to be your first medium probability trade probably, and this is going to be the first trade where you're identifying trouble, an area with the potential to break but hasn't broken. When you are embracing a medium probability trade, it's imperative that you don't give up momentum. It's imperative that you don't give up your entry area because you have already willingly and knowfully forfeited the clear path. So we're going to talk about how to take that 50-50 trade, but I want you to see that 50-50, smalls are through, large are not, even with odds favorable, does not guarantee a win. It does not guarantee that the areas are going to break. 50-50 without the advantage of momentum, the area holds, right? There's that 50-50. Large triggers a full bar away. Next-gen users know not to take that trade. So, guys, that 50-50 trade, that medium probability trade, let this be your second trade. Wait until you figured out momentum. Wait until you figured out a clear path. Wait until you figured out your entry, your best of the best spot on a smaller, faster chart to enter the market, guys. And that's what we're going to do right now. We're going to talk about taking that large chart, taking that broad stroke, and we are going to whittle it down. Love the word whittle. We're going to whittle it down to 15 to 30 bars. And you're going to use a limit order, meaning that you're literally going to be able to wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback, meaning a small retracement in price. So when the large crowd, the big chart says up, the big chart says momentum, the big chart says clear path, you're going to go to your small chart. Large crowds telling you what they want. There's going to be a small crowd that fights momentum. There's going to be a small crowd that fights the trend. They're going to force a pullback, a tiny retracement in price counter to the underlying trend. Next-gen users, you're going to use rule number 3 to identify where that little fight is likely to end. And you're going to use a limit order at an area inside of favorable large triggers on your smaller, faster chart. And this becomes your entry for the highest probability trend trade. David Bout, I'm not sure exactly what that means, other than there may be a potential memory issue. You can click OK and reopen and see if that fixes it. You can also get in touch with Jason in tech. I'm sure he knows exactly what it means, and he probably knows a path to fix it. And then for those of you that are new, my sad admission of guilt is that I'm not a very techie guy. I rely on my brother and Jason very much for my tech help. I've got all the basics down, but I'm a chart reader. David, how's the quality of your computer? That would be my first question. Because if your computer's struggling, it's a fast gaming computer. Do you ever go through and clear out the RAM, defragment the RAM? I do it every morning, and it helps me a lot. I use Norton Utilities to go through and give it an enema each and every morning. Something's drawing on your computer, probably. Yeah, something is drawing on your computer. I'm not sure what it is. You could have Jason take a look. He could probably help you out. Yeah, the only thing Jason can't fix are the things that aren't broken. Let's talk about rule number 3, guys. Use a limit order, meaning that I'll wait for the market to come to me, and I'm going to have that limit order waiting at an area at Fibonacci support or resistance, mid bands, or yellow 1-to-1s. But here's the key to finding that point where the market is most likely to continue. Let it be inside of favorable large triggers. Favorable large triggers means that your synthetic triggers, those stepped looking triggers, and your large triggers, the smooth large triggers native to your 5-1 chart, are overlapping one on top of the other. They're like two snakes riding piggyback. If you set your hands on your desk one on top of the other, guys, that's favorable large triggers. Favorable large triggers that look exactly like this are going to give you the smallest window of opportunity. And the smallest window of opportunity means that you can have the least amount of risk on a trade. So when we talk about finding an entry, we're talking about using a limit order at the area inside of favorable large triggers on a smaller, faster chart. So when the large chart says up, when the large chart says odds favorable momentum, when the large chart says nothing in the way, the path is clear, that's when you turn your attention to the smaller, faster chart. The large chart has led the way. The smaller chart is going to refine that one bar into a potential entry. And guys, remember we talked about those tails. We're not trading tails on the large chart. We're trading pullbacks to areas inside of favorable large triggers on the smaller chart. And that's the point where the bottom of that tail or the top of that tail is most likely to form on the large chart. So everything says up on the small chart. The momentum is up, the path is clear. I mean, everything is cranking up. My triggers are favorable, large and synthetics are one on top of the other. I've made the decision that it's time to take a trade, and I'm looking for fibs, mid bands, or yellow one-to-ones. But the key to my success is making sure that they're inside of those favorable large triggers. Like my favorable large triggers have eaten them because price tends to pull back to those large triggers, those synthetic triggers. And when they're one on top of the other, it narrows the area where it's likely to pull back. And then these areas, fibs, mid-bands, yellow one-to-ones, give the market a bounce point. It's like throwing a tennis ball up against a wall. So I have to wait for the pullback, guys. I have to wait for that small crowd to fight everything. And that pullback begins with a reversal bar. I'm going to see a red bar after all of these green bars. Or if I'm looking for a short trade, I'm going to see a green bar after all of the red bars. And what happens is at the time of this reversal bar, you're going to create your window of opportunity, that point where the market is most likely to continue. And your window of opportunity will extend from your highest point of support. Let me pull up this picture. This is my favorite picture for it. For a long trade, it's your highest point of support, meaning the area closest to your reversal bar inside of favorable large triggers, and that window will extend to your lowest point of support inside of favorable large triggers. Notice that the red box identifies my favorable large triggers. The teal shaded area has defined where the market is most likely to continue. That is most likely going to be my bounce point. My entry for the highest probability trend trade is a tick or two above the highest point of support inside of favorable large triggers. Here's the view in a downtrend. The reversal bar prints, you're going to identify your trigger lines. And in this case, there's only one line inside of favorable large triggers, and that line happens to be a magenta midband. That midband represents the point where the market is most likely to continue. Nexgen users are going to activate a limit order a couple ticks below that midband, and that becomes your entry for the highest probability trend trade. This picture also reminds you that areas outside of the favorable large triggers are not a part of the window of opportunity. There's that refinement process. The one bar, everything says down, everything says the path is clear, the momentum is present. Wait for the reversal bar, identify the triggers, identify the area within. So guys, if we go back to the manual and we look at the reversal bar in the area, we've identified your highest probability trend trade entry. Guys, this is your first 20 days with Nexgen. Is taking the advantages on the large chart, right? Taking the advantage of momentum, taking the advantage of a clear path off to the left on the large chart, letting the large chart lead the way. Waiting for the reversal bar after the advantages are realized. Taking a second to find your favorable large triggers. And then even more so, taking inside of those favorable large triggers from your highest point of support to your lowest point of support inside of them. And that becomes the area where the market is most likely to continue. Guys, give me a why if you're with me in the room here. At the time of the reversal bar, identify the window. As the market pulls back, you're going to have a limit order waiting 2 or 3 ticks above that area inside of favorable large triggers. If it reaches your limit order, you are now in a long position with the advantage of momentum as dictated by the large chart. Hey, Ivan, welcome to the room. You have the advantage of a clear path because no termination conditions were present. And now you have the advantage of having entered the market where it's most likely to continue at that area inside of favorable large triggers. Then it's not your money, Charles. You're saying, but Mark, what if it goes to here and zooms off to the distance? It's just not your money because the advantage of the entry isn't there. And guys, this is gonna get you as new users Because the closer it gets, the more you want to be in that trade, right? But your smaller, faster chart, Charles, it's a tiny little refinement chart. Look at the fluctuation. This bar may have gone up and down 50 times before it created a new bar. And if you got nervous, if you got that fear of missing out, you may have gotten in at the top of that bar, away from the areas inside of favorable large triggers. And ultimately, the market comes down and it hits your limit order. And then you're in that best of the best. And guys, if it hits the limit order, you're in. All the advantages present. But remember that this is a window, right? So I want you to be prepared that it may go to the bottom of the window. The tighter the triggers, the smaller the window. The fewer the areas, the smaller the window. But it may go to the bottom, but we're in at the top because of the momentum, because of the clear path on the large chart. Here's the other part that nobody wants to talk about, guys. Sometimes it's going to extend beyond the window. The market's just going to smash through it. Remember, we're not in control of the market, right? But what we can be in control of is putting a protective stop right there outside of the window of opportunity, right beyond where the market should go. And what that does for me is if that small crowd found a little extra giddy up in their step, right? And they push beyond that window. I have a protective stop waiting, guys, and I take a loser on this trade, and I don't sweat it because all the advantages were there. And anything that wins 70 to 80% of the time is obligated to lose 20 to 30, right? We don't get to pick which 20 to 30. We don't get to decide, well, I already took a loser, so this one has to be a winner. I follow the rules, therefore it has to be the winner. Guys, never create expectations for your trades. Never create expectations for the outcome. Understand that when the rules are met, the potential is there for it to win 70 to 80% of the time, right? Focus on having strong triggers. Focus on having a clear path. Focus on getting in at the right spot. And then let whatever happens happen. Small losers are a normal part of a positive equity curve, guys. Small losers, they happen. It's cool. You'll learn to not sweat them because this is a trade that when you follow those rules, when you take that best entry, this is a trade that 70 to 80% of the time, this is the outcome. Termination created the full reversal. The large chart gave you momentum and a clear path. They pulled back to the area inside of favorable large triggers. You got in up here. Your stop was down here, and they overran your entry a little bit. That's okay. The rules were still met. But once they gave you a reversal bar in the direction of your trade, you moved your stop. From outside of the window of opportunity, you reduce risk to below that area. Now you have less risk on the trade. Because you waited for the pullback to the areas, you had the furthest distance to get to your profit target. You have managed your risk before you ever managed your profit potential. Guys, this is your high probability trend trade. This is the absolute best of the best, and this is the trade that if you spend 20 days focused on the entries, you're going to be a chart reader. You're going to understand where the market is likely to go through momentum, and where those potential termination conditions lie. You're going to understand where the market is likely to continue by using a smaller, faster chart. Those areas inside, right? We said that we don't trade tails. Guys, we don't wait for the tail on the large chart because that market is gone by the time this bar forms. But through using the refinement process, that smaller, faster chart, we can identify exactly where the market is likely to continue. And if you circle the tail on a large chart and it lines up with an area of support inside of favorable large triggers, guys, that's your best of the best. This is your picture to create recognition so that it becomes easy. And what you're going to find is this also becomes a study tool. I'm going to go to crude because I saw the perfect crude oil trade set up earlier today. I'm going to scroll back and let's go through an entry. What do you say? This was right around 8:15. And I want you to see how this set up, guys. Everything says up. The path is clear. You know what? Let's just not even worry about anything other than the best of the best look and focused on the entries because I don't want you guys getting caught up on a tick. So everything starts with a large chart, guys, and this is what it's going to look like in the moment. Large chart, direction is up. So brand new users, give me a Y if you see it. The trend is up. We're only looking for rules to be met for high probability trend trades. I'm going to walk through how I read a chart to look for a trade. Once I've established that I'm only looking for long trades, I'm looking for odds favorable momentum. I'm looking for small triggers to be above the large triggers. I'm looking for my large triggers to be wide and angled in the direction of the trend. Is rule number one met on my large chart? Do I have a market that's likely to continue in the direction of the trend? What do you think, guys? I'm going to tell you right now, you're not obligated to participate, but you guys that take the time to write why, that say yes, that participate, you're the people that are going to get to where you want to be the fastest. Then next, I have to ask myself, has price reached an area? Has price reached Fibonacci resistance? Yellow one-to-ones, has it reached a divergence high? If it hasn't, I have a clear path, guys. Thank you, Dano. So now I have an uptrend. I have odds favorable momentum, and I have a clear path. Now I'm going to turn my attention to my smaller, faster chart. And look at it fly up, guys. That smaller, faster chart is railing to the upside. So I'm looking, do I have strong triggers? Smalls above the large? Absolutely. Are my large and my synthetic heading the same direction? Strong? Absolutely. I do have strong triggers, Charles. And my large and synthetic are right there on each other. And they're up like sharks about to breach. And the market continues up, and I get worried that it's going without me. And the market continues up, and I'm fearful that I'll never make any money. And the market continues up, and I'm wondering, why on earth did I listen to Novak in that room? And then it gives me a reversal bar. Then it gives me the beginning of that fight. And at the time of the reversal bar, I'm going to identify from my highest point of support to my lowest point of support inside of favorable large triggers. Okay, I got you, Charles. So if I do it through the trigger lines from the highest point of the triggers to the lowest point of the triggers, and then I refine. The highest point of support to the lowest point of support. Guys, this is your window of opportunity. This is where the market is likely to continue. It can happen at 15, it can happen at 02. I don't know. So I have to make a decision. Do I go a tick or two above? Or do I get scared and put it all the way down here at this support because I don't want to watch it go against me at all? It's the hardest part of trading, guys, is being willing to sit through some shenanigans. And this market pulls back. And if you entered at the highest point of support, right? If you entered at the highest point of support, it missed you here. You're in there now. And where does your stop go? Outside of the window of opportunity where the market shouldn't go. And in this case, it is about 14, 16 ticks, guys. And that market comes down. And now it's still inside the window. It's still at support inside of favorable large triggers. Does everybody see it? Give me a Y. Reversal bar prints. We identified our entry. Our stop is where the market shouldn't go. And now all I'm waiting for is I'm either going to take a loser or the market's going to give me this reversal bar. And if it does, my stop just came up to here. And now I've got 16, got about 7 ticks of risk on a trade. I'm going to put my areas back on because I want you to see how you can determine your targets. In this particular trade, I've got a big divergence high right there. This yellow line, let me change the color of it. This sandy brown line is where my limit order was waiting, Charles. So as the market came down, see how it's above the area of support inside of favorable large triggers? And then, Charles, check it out. What if it doesn't reach your area? It's not my money, right? My rules are still met. I'm going to be patient. I'm not worried about fluctuations. Market comes down, you enter, it makes it to the lower point, and then it heads in the direction. 86.36, guys. This is $200 off in the distance. This is an area where the market is likely to go with all this momentum. And watch what happens. 36 to the tick. 36 to the tick. You guys knew it. And this is how you study, guys. This is how you can go back and learn to trust the methodology. When you see these tails, when you see that odds favorable, circle it. Watch where the circle happens. You ready? Holy smokes, it's a rules-based trade. Guys, this is your first 20 days. Focus on rules met on the large chart. Focus on the pullback to the area inside of favorable large triggers on the small chart. I want you to take this picture. Guys, this is your study tool. Go back and circle and see if it lines up. Let's annotate a chart together. Use your call out. Rule number 1 says odds favorable momentum, right? The advantage that strong triggers gives me. There it is. Let's draw a line right to the separation point, letting me know that you know exactly what we're looking for. Rule number 2 says clear path, meaning that we have room to our target. Clear path happens from the top of the bar. This is a great picture, guys, because from 32 to 36 is only 4 ticks, isn't it? $40 worth of profit. How many of you were worried about that? Mark, there's only $40 to get to the potential. Nobody? You guys are amazing because you remembered that we sell pullbacks, right? So that 4 ticks turns into 20 ticks. That $40 turns into $200. And then what I think the most important thing that new users can write on their chart is rule number 3 in its entirety. Pull back to an area inside of favorable large triggers. Because what it does is it reminds you that we're not jumping in, that we're waiting for the best of the best. And then after the trade, you can even put, there's my target. Guys, if you drop this into the room, if you copy this picture, if you paste it in the room, I'm going to pull your picture up. Whoops, not that one. I'm going to pull the picture up, and when I pull the picture up, you and I are going to have a conversation. And Charles, though, you're going to post this picture in the room, and I'm going to say, Charles, you're telling me that with odds favorable momentum and a clear path and a pullback to the area, this became a very easy, relaxing trade for you. You had all the advantages present. Charles, this is your best of the best. So you're going to pull up your spreadsheet, and you're going to go to my favorite looks. And you're going to say, because this one fit every rule, because this trade had all the advantages, because I got in at the best of the best spot, this is a high probability trend trade long. And this is the picture that I'm going to commit to memory. This is going to be my trading plan. And guys, you can go back and you can study this look all day long. Let's see if there was another opportunity. I'm studying and I'm looking and I'm wondering. And I'm just looking for odds favorable. I'm looking for a clear path. And I want to circle one of those tails. And of course, coming out of the holiday, guys, it's going to be a little different. My goodness. That's 2 a.m. So great question, Charles. Once you enter a trade, if you've identified large areas, large chart areas, they become great profit targets. Absolutely. Or you can watch for 3 divergences in the same location on the smaller, faster chart. Management's really going to be the second piece of the puzzle. Entries are going to be the first thing that you focus on. And I'm going to tell you, if you give yourself a couple weeks of focusing on entries, focusing on the absolute best of the best, management is going to come together. So I'm going to give you guys first. Sorry, my monitors are all jacked up from the travel. The first thing to focus on is your entries, guys. The first thing to make sure that you're taking care of is the idea that you enter the market where it's most likely to continue. This checklist is designed for you to print out, to set on your desk, and for you to hold yourself accountable in each and every trade, to make sure that you're trying to follow the rules, that you're trying to give yourself the advantages. And it reminds you that a good top or bottom is the precursor for the absolute best of the best. But you can take it without a good top or bottom, but you're going to be looking for those divergences. It takes a little extra on the management. Odds favorable triggers on both charts. Trend, no terminations, area inside of favorable large triggers, guys. I've never had anybody use this checklist exclusively for the high probability trend trade to be able to mark yes on every one of them and do worse than 70% winners. And this is where I remind you to ask yourself, why do you want to be a day trader? Do you want to be a day trader for adrenaline, for excitement? Do you want to be a day trader so that you can post in this room, or do you want to be a day trader so that you can get paid? Me personally, I want to get paid, guys. This is the highest chance of success to get paid. This checklist is going to help you get into the market at the absolute best spot. I'm going to give you the exact same checklist. Good. That's the right answer, guys. I'm going to give you the exact same checklist that visually, because remember, you've got to recognize the looks so they become easy. What is a good top or bottom? There's that one straight from the manual. It's a termination that creates a full reversal. How do I define odds favorable momentum? What's that strong trigger look? And then even more so, what's the opposite of strong? What's that anything can happen? How do I determine a termination condition? Guys, literally each part's broken down individually to get you to the entry, to get you to the best of the best. You should study this every morning, right? So take this one and put it on your computer and look at it in the morning. Take the other checklist, print it out, put it on your desktop, right? Hold yourself accountable. Not only in every trade you take, but through annotation. Hold yourself accountable. Get to the point to where you can police yourself. And then finally, if you don't have a written plan, you don't have a plan, guys. If you don't have a written plan, you're going to be prone to trade emotion. You're going to be prone to trading hopes, fears, wants, desires. And I'm going to tell you right now, the market couldn't care less about your hopes, wants, fears, and desires, guys. The market's going to do everything that the market does. So you have to have a statistical advantage every time you get into the market. That's what your plan is. Your plan defines your advantage. And it starts with entries. But here's the disclaimer. This is what we call the KISS plan, the Keep It Simple Silly plan, or the Keep It Simple Sunshine plan. Anything but stupid, because that's an ugly word now, right? Can't say it. Oops, I just said it. Disclaimer, this plan is a stepping stone in your learning journey. It's going to optimize your chances of success with a high probability trend trade and that medium probability, that 50-50 trade as a new user. Stepping stone, guys. You are not obligated to trade this plan. You're not obligated to ever even look at this plan. But I'm telling you, if you're brand new and learning to be a chart reader, this is your best chance of success. And you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's a little AI wording there. You'll be empowered. Guys, basically what it says is once you're a chart reader, you're going to figure out what the easiest reads are for you. And you're going to write your own plan that's going to get you into those trades. Or you're going to say to yourself, I've been following this KISS plan for 30 days and I can't seem to lose. I can't seem to fight anything. I can't seem to break rules and I'm finding success. So you may stick to this plan forever. Guys, it's a simple plan for consistency. Never fight the large chart direction. Never fight the large chart momentum. That's not trading advice. That is a plan that you may adopt as your own that gives you the best chance of success. And then you're just going to define your entry, guys. Learning to day trade the market is like eating an elephant. You have to do it step by step. your step by step is today you learned how to identify the trend. And then once you were able to identify that trend, you visually saw when the advantage of momentum is present. This is the second step. And then you have to work through termination conditions. And guys, this is going to take you a little longer. And you still may trade into them. If you're anything like me, I traded into termination conditions for 3 months straight before I finally believed them. But once you understand the trend, and then you add to that understanding momentum, and then you add to that understanding termination conditions, well, you can go to that smaller chart and start looking for entries, right? How do you get here fastest? Through posting pictures in class, through asking questions, through participation, through study, through feedback. First 20 days is just getting in at the right spot, guys. And then once you get in at the right spot, you've got to do something with that great entry. That's where your management comes in. That's the second big piece of the puzzle, is being able to do something with that great entry, guys. And that methodical, mechanical entry, that rules-based entry that eliminates emotion, that eliminates hopes and fears and gut feelings and anxiety, you're going to do the same thing with management. And it all revolves around your perfect entry, guys. Because when you get in at the point where the market is most likely to continue, it allows you to identify where the market shouldn't go. And that's exactly where your stop goes. And then once you put your stop where the market shouldn't go, there's nothing for you to do. You're either going to get stopped out. Small losers are a normal part of a positive equity curve, or you're going to get the second part of your management plan. If the market gives me a reversal bar in the direction of my trade, then I will reduce my risk to 2 ticks above that reversal bar, or 2 ticks below if it's going the other direction. And then once again, you find yourself powerless to do anything. You lift your hands up off the mouse, you roll back 6 feet from your chart, and you know that you're either going to be stopped out for a small loss, or the market's going to go to your first target. And guys, I'm telling you, with the advantage of momentum and a clear path, it's rare that it doesn't at least bang its head on that first target. The first target, according to the KISS plan, is $100. Because at $100 you get paid. And at $100 when you get paid, it creates confidence through the memory of success. It creates all of those hormones, serotonin, dopamine, that give you a feeling of elation. It dries up the sweat from your palms, guys. It kills all the butterflies in your belly because now you just got paid. You're a success. People are proud of you. You're proud of you. And you're going to move your stop to break even. You're going to say, I've got money in my pocket and absolutely no risk. And at this point, there's nothing for you to do, guys. You're either going to get stopped out, break even. And I'm going to tell you right now, you're going to get stopped out, break even a lot as you learn to read your charts well enough to manage your trades. Or that market's going to go to your second target. And your second target is only $200, which means that it's only $100 off in the distance. But if it reaches your second target, you just made $300. Zero risk and having been paid makes it easier for you to sit on your hands and wait for the second target. And that's a $300 trade with the advantage of momentum, a clear path, and an entry area. That's a $300 trade from the best of the best. That's a $300 trade on a trade that typically wins 70 to 80% of the time. Guys, this is your look and this is your management as a brand new user. Eliminating emotion and fear and opinion and keeping it very, very pragmatic. $300 a day is a $1,500 week. That's not a bad week. That's a $6,000 month. That's a pretty good month, right? And that's a $72,000 year based on one trade hitting its target, shutting down, going and playing golf. This is what we focus on for the first 30 days with new users, getting into the market at the right spot so that you can manage it accordingly. So let's take a look. Let's go back to that crude oil trade that you guys took the entry on. And let's see what would have happened with that pragmatic management right there. Where was your entry? Back in the 8 o'clock hour. There it was. So we decided that we were in at 16, right? Which means at 26, You guys made money. And at 36, you exited the trade with $300 profits. Everything revolves around the great entry. So guys, that's our first hour. Welcome to Nexgen. We talk about the same darn thing every day. We talk about being able to recognize the advantage of momentum, being able to recognize the advantage of a clear path, being able to take a shot at a trade that typically wins 70 to 80% of the time. We also talked about your first medium probability trade, which is when the smalls break through the area and the large don't. Remember we said that this area isn't broken. This area isn't broken. So we're not going to sacrifice momentum. You should have strong triggers. You should have no divergence. And we're not going to sacrifice a window of opportunity. That's where the market's likely to continue, which means that you could take a low risk shot at this trade with the area with the potential to break. And this one carried you to 300 profit as well. So guys, we're going to keep it focused in the beginning. We're going to keep it focused on the best of the best. You guys are going to be able to recognize on any market, any time frame, you're going to be able to look at your stocks, you're going to be able to hedge your options, and you're just going to focus on advantages. Are there any questions about the high probability trend trade before I take a little break? Any questions about momentum? Any questions about a clear path? Any questions about the entry? Guys, the plan has been the same for decades. The only thing that you need to do is practice. Practice, 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 and post all those pictures. Give me so many pictures that you think you're taking over the class. Give me so many questions that you think you're abusing the time. You're not. I want you to be selfish with your time, guys. This is designed for new users. It's an educational room. I love all my experienced traders, and there's always something for you to learn, but the idea is that we get the new traders up to speed and turn them into experienced traders. So guys, I'm going to let you watch crude oil because it just looks like it's more fun right now. 50-50 with divergence doesn't work. Smalls were through, large were not. We sacrificed momentum. And look how it didn't follow through. 3 divergences in the same price range. Continues to push down. Holy smokes. If only we had a set of rules to keep us out of that trade, to keep the powder dry. Guys, that's your KISS plan. Let me drop that in the room. I'm going to go take 5 minutes, guys. I'm going to reload my water real quick. When I come back, we're going to start posting, or I'm going to start going through the pictures that you guys have posted. We're going to start talking about the advantages that you saw. I want to remind you that this is an educational room. And this is for you guys, and I'm one of them. I'm going to tell you right now, that need their ego stroked a little bit every now and then. You're just going to post stuff without annotations. You're going to post stuff because you won. Guys, I'm going to take every picture posted in this room because it's an educational room. We're going to go back and we're going to relay every picture to momentum, clear path, and entry area. And we're going to hold it accountable to these 3 advantages, whether it's a high probability trend trade or not. Understand that everybody's plan can be different. So I'm also going to take the same pictures and I'm going to relate them to advantages that I see. And we're going to talk about entries and stuff like that. Um, awesome, Gary. I love that. Working on your plan. But everything stems from advantages, guys. Everything that we do is going to stem from those advantages when I look at your charts. But for now, I'm going to take 5 minutes and I'm going to stretch my legs. I would encourage you to do the same thing. Too often we get stuck in front of the computer and we never even blink. We don't move, we don't stand up, we don't stretch. Guys, walk a lap. That's what I'm going to do. I'll be back in 5 and we'll get into that second hour. Back in a minute. Mic silence. All right, let's get into the second half. Gary, you said that you have a notepad now. You write things within your plan that you need to work on. The first one is patience. Awesome. So, Gary, I'm going to play college professor real quick. Um, you wrote that you need to work on patience. Did you write down how you're going to work on patience? You need to let your trades start from terminations and avoiding channels. Did you write how you're going to do that? And not moving targets and stops prematurely means that you have a concrete plan in place, right? So just saying that I'm going to do it is one thing. Saying how you're going to do it becomes a huge advantage as you grow that plan. And then, guys, I'm scrolling up to the top, and we're going to start looking at your pictures for the day and see what you guys are doing. David Bow, you got us started with one that says oops. So, David, I'm going to beat you up a little bit just because I like you, okay? Because I want you to be successful, because I want you to be able to recognize advantages. David, are you in here? Couple things that I notice. No, he's not in here. So, guys, let's talk about chart annotation, and we'll use David example. This bar is at about 547, showing me his entry. This bar is at almost 6 a.m. I can't see what's going on, right? I can't line up this chart with that chart. That's one of the challenges that we want to overcome. Always show me your entries on both charts, right? So new users, let's talk about this one. The direction is down. I love it. He looked for a short trade. The momentum is down. The smalls are below the large. Everything is cranking. Who can tell me which rule was broken? Anybody? We're just going back to advantages. Rule number 2, absolutely. So guys, if I'm a brand new user and I come back and I see entry and oops, what does that teach me? What am I identifying? Not a darn thing, right? Why don't we do this? Why don't we start as the market coming from a good top? There's a termination that created a full reversal. I like that. Let's point out every time. This is my odds favorable momentum. Why am I doing this? I'm doing this because I want to be able to be consistent. And then let's do this. And here's the most important thing, guys, is I'm looking for rule number 2. Dwight, it's because price reached Fibonacci support and none of the triggers broke. It's that simple recipe for termination conditions. Price reached the area, none of the triggers broke. Look at it up here. Price reached a divergence high, none of the triggers broke. The same reason you shouldn't go long up here is the exact same reason that the rules aren't met down here. Does that make sense? And then watch this. Because rules not met on large chart, this chart is out of the equation. So because I never got odds favorable and a clear path, I'm never looking for the entry. And look at the entry, guys. Those aren't favorable large triggers. Those are split and divided, right? And the only areas are in between them, not inside of them. So this is a great example of why I want you guys to annotate your charts. Oops is fine. If you made a mistake, that's totally cool, right? But go through the whole process as a new user. Go through the process of identifying the three rules separately. Go through the process of policing yourself, of talking about it, of making sure that each and every time you take a picture, each and every time you take a trade, you're reminding yourself of the advantages that you're looking for. Does that make sense to everybody? I hope so. I'm not beating up the chart. That's a great look on momentum and direction. But a little self-assessment goes a long way here, guys. A little self-assessment goes a long way to consistency. All right, Alan. Alan, look at this. This is the exact same entry that we did in class, isn't it? What do you think, guys? D-Rock, I do believe there's people that use TradeStation. This trade, Charles, or the previous? The best way to take this trade? Oh, Charles, I would love to. Are you ready? Let me make this huge. There you go. That's exactly how you take it when the rules aren't met. 100%. Short and simple. So, Charles, because there was a termination condition, I'm trying to get all that nonsense off there. Because there's a termination condition, there is no short. And it really can be that simple. And that's what a lot of people ask. Well, if it didn't fit the rules, how do I get in? Just embrace the idea that there wasn't an entry. Sometimes you'll see that market move like 50 points, Charles, and you'll ask yourself, well, how am I supposed to capitalize on that? And if your rules aren't met, sometimes you just don't. But what you can bet the farm on, people do it. Look at Allen's chart. Termination creates a full reversal. Full reversal creates odds favorable, gives a clear path. Allen takes the pullback. Allen, you got in a little bit below the highest point of support. And targets reached. He knew exactly where the market was likely to go. He has it identified. So, Charles, the idea is that you take this one, right? Is you take this one and you understand that this is your best chance of success. And notice how he put in his feelings. He was confident at entry. And as the trade went on, he started getting nervous. He's still feeling a fear of losing money. And that's okay. That's normal. It's up here, right here. There you go. But that's the exact same entry, Charles, that we took together as a class. Alan's got some reps with the software. Alan didn't miss it, and this will be the one that you never miss. And then the flip side of that is that'll be the one that you probably never take. One has an entry because the large chart said. The other one has no entry because the large chart said. Large chart always leads the way. Great pictures, guys. And scrolling back up to the top, let's see what else we have. The idea is that you're not going to be great at this on day one, right? You're not going to be confident. You're not going to be like, "Oh my gosh, I'm so good at this on day one." The idea is to get a little bit better every day. Gary, termination was over here. Price didn't come back to it, but you're absolutely right. No shorts, no longs. Sit on your hands. No longs into a termination. Sit on your hands. Gary's going through and just reminding himself of his rules. Termination up top, termination below, guys. Identifying channels, identifying consolidation, identifying when rule number 2 isn't met, and then just sticking to it. Jose back from vacation. And then Jose, that was a 50-50 on the divergence high. It's a beautiful looking entry. There's your 21-3 termination. Jose, you just got caught in that market that was trying to figure it out, right? You just got caught in that market that couldn't go up, that couldn't go down. Um, and then those 50-50 trades tend to work less after consolidation. And then you use an even higher time frame. And that's that term that we've seen before. So Jose, it's a great look on two charts. It just didn't work. Happens sometimes. And then Gary. And guys, if you have questions about someone else's charts, please ask them. Gary, you said termination. You said 50-50 look, but synthetic triggers 1 bar away. I'm not sure where you're talking about. You talking about the gap theory here to the large triggers? Knowing that when you reach an area and the large triggers are a full bar away, it kills your chances? Gary, did you also notice that your large triggers are all the way down here and your synthetics are all the way up here? Meaning that your trade has almost 13 points of potential there. Yeah. Let it be perfect, guys. Your money's worth it. I think that's one of the things that we forget is that it doesn't cost anything to not take an iffy trade. It doesn't cost anything to sit on your hands and do nothing. And guys, here's the king of consistency. When everything clears the problems, when the momentum is its absolute strongest, Ron takes advantage of it. I love this. Plenty of room to run. Price clears the trouble. Great momentum. Not bigger trades, more contracts. That's a 4 lot, guys. That is, where did you enter? It's 60 to 59. That's $400 worth of profits. And then just thinking about where to spend the money. Ron, beautiful trade. And then, guys, one of the things that I want to stress, the most successful traders that I know take the exact same trade every time, guys. If you look at 90, well, we'll say 95 out of 100 of Ron's posts in this room over the last 6 months, they all look like this. They all look like a clear path with momentum. And there's a few times that he deviates just to give me heartburn, but this is his look. This is the idea that simplicity is key, guys, that you give yourself a statistical advantage and then just add contracts. Don't even worry about catching all the trades, catch the best trades. Odds favorable momentum on the 13-2 and the 5-1. And then Dwight, you take a little momentum entry. You let it clear and go. I like it. Dwight, you found the one that works for you, right? And it involves momentum on both charts. Get in, get out. Got to order more robes. Yeah, Ron's starting a cult. And then Jose. Odds favorable momentum and a clear path. Jose, I'm more inclined to say that that's anything can happen triggers in a clear path. Would you agree? Anything can happen triggers, but the path is clear. And then you use the one-to-ones. Everything says down. 2 divergences doesn't kill a trend. You take quick profits, and you get paid again down there at that trouble spot. Nice trade, Jose. When you learn to read your charts, you may find trades that fall outside of those rules a little bit. And then Gary, all that chart reading, all that waiting, and then when everything finally lines up, you get paid. Nicely done, Gary. Guys, Gary posted 7 pictures of rules not being met. And when his rules were finally met, he capitalized and took advantage. Nice job, Gary. Great trading. Paul, great top, 50-50, no divergence. There's your first one. Got paid, divergence takes you out. There's your second one with no divergence, and that one just didn't work out. Um, it's a great look, Paul. It really is. You did get a market flow confirmation. Stops in the right spot. Just didn't work out. Fits your rules. Nicely done. And then looks nice, but it's straight into a termination condition. So you chose not to take it. That's the hardest thing to do. That is the hardest thing to do, is to do absolutely nothing when your rules aren't met, guys. I'm telling you right now. That's the one thing everybody's going to struggle through. And Gary put the magic word at 1036. Patience, right? Just waiting for the best of the best. Guys, your money's worth the best of the best. There's odds favorable momentum, right? Don't have a clear path. Just no opportunities. That's okay. Price reaches resistance, no triggers break. Sit on your hands. Do nothing. Not odds favorable momentum, nor do I have areas inside of favorable large triggers. How many advantages are you willing to give up and still take a trade? It does have a clear path. It is trending. It is support. It can't be high probability, though. What do you guys want to talk about? We talked about the rules. We've already exhausted all of your pictures. Whew, today went quick, didn't we? Didn't it? Let's see what I have pictures of. This one's for Ron. Who controls the market? Guys, the only acceptable answer on who controls the market is not me. Ron controls the market. It feels that way sometimes. Guys, think of the sharks. Think of the people that move the market as sharks, right? They're swimming. They're the top predators. These are the guys that you don't want to mess with, right? These are the guys that create momentum. These are the guys that create trends. These are the guys that react to Fibonacci. These are the people that when price reaches that Fibonacci support and it rockets the other direction, this is the guy that makes it happen. I like to think of myself as a remora. Remoras hang out. You guys remember the Looney Tunes, that little chihuahua that used to bounce over the bulldog? That's us, guys. This is the bulldog. I need to get a picture of that, I guess. We're remoras. When the shark does his work, when the shark is a shark, we can still take advantage. We don't have to be the first one in. We don't have to be the last one out. We let this guy establish a trend. We let this guy establish momentum. We let this guy say, hey, I'm in between areas. I don't have any decisions to make. And then we just kind of swoop in and take advantage, guys. I'm a big fan of that picture because it just goes back to who's in control, the large crowd. It's not me. I will never be in control of the market. The only thing I'm in control of is whether or not my rules are met. 50-50 with divergence after a bad bottom. Not today, crude. Not today. And guys, think of that smashing through idea too. Let's go to crude oil real quick. Smashing through. The closer I am to decision-making points, the less likely it is to break. Right? Let's go back to that one that Alan caught perfectly. Crude's been up and down today, hasn't it? The closer I am to decision-making points, the less advantage I have. There it is right there. That's that one that had 4 divergences in the same place, right? Look at how far away everything is from the points where decisions were made. Absolutely, Freddie, you have to be patient, right? But look at where this trade happened, right? There's the top of the bar, the bottom of the bar. So far away from everything that created indecision, right? And not yet to the next decision-making point. This is where the easiest trades happen. The easiest trades happen in the middle. The easiest trades happen away from the decision-making points because we're not making the decisions. What Paul's saying is that this is a 50-50. The smalls have eked through, the large are up strong, but then he's got divergence, which says, we're starting to lose momentum and a clear path, and I don't have a termination that created that full reversal. What happens from here quite a bit is the same thing that happened from here. Doesn't this look familiar? Patterns repeat themselves over and over and over. That's it. Without a clear path, Paul, why bother? It's a decision-making point. Let it break. Great chart reading today, Paul. You and Gary are on it. I'm telling you guys right now, there should be a couple different pictures that you take. You should take pre-trade pictures. Talk about what you see. I don't think I do either, Jose. Talk about what you see before the trade happens, right? Talk about, I didn't have one either, Jose, but I still had crap triggers and nothing in an area. So pre-trade, what's happening before you enter the market? Take those pictures, talk about it. Take entry pictures when you enter the market. Take during trade pictures because you're going to come back to those pictures and you're going to look for changes that needed management. And then guys, take after pictures. If you took this long trade here, go back and take an after picture. Well, what did I miss? Right? If I went long at 4,400, what did I miss? Well, I didn't have the best trigger look, right? And I didn't have areas inside. Take the after pictures too. The more pictures you take, and there it goes, it just pushes lower, right? And then that 4402 is native to his let me reload historical. And we'll see if it shows up. But I did a full workspace rebuild at the beginning of last week. And it's still loading data. But guys, give me a Y in the room if you can recognize that you don't have odds favorable momentum. Give me a Y in the room if you can recognize that there's no areas inside of favorable large triggers. Isn't it pretty outstanding to take the burden of hope off of yourself? And all you have to do is say my rules were met or my rules were not. That's it. Because without the advantages, you're incorporating hope. And I'm not saying that hope is always a bad thing, but I'm saying more often than not, hope's going to do you wrong. Rakesh. How's it going, Rakesh? Nice to see you. Let's see what you did. Clear uptrend and green background. Most of the time you enter the trade at the blue termination point and hope that the market will reverse from here because the large chart is an uptrend. But market did not reverse and continued to go down and stopped you out. What are you doing wrong? Rakesh, were you listening to us? We just talked about it. You don't have odds favorable momentum, right? You also don't have areas inside of favorable large triggers. So Rakesh, this particular one forfeited 2 of the 3 rules, didn't it? And this pullback right here, Rakesh, at 839 or 939, I can't see it on this chart because this is like 934. So do me a favor, Rakesh. Hit that black arrow and show me the 2 bars together. But this is also NASDAQ, which meant that you fought small triggers, which is a horrible thing to do on NASDAQ. And it looks like it's coming off of 2225, so I can't see if it had a clear path or not. This is not this. Does that make sense, Rakesh? This is 933. This entry was at 940 almost. The two charts don't line up. Let me open up my NASDAQ. Or show me what it was doing on yours. And then what we can do. Okay. So cool. I thought that you got stopped out. So there's two things, Rakesh, and let's talk about NASDAQ for a second. Assuming this was a clear path, right? I don't have any rules about colors. I don't have any rules about colors. I have momentum. I have a clear path. So let's just assume that this was a clear path. And you're looking for an entry, and you're not sure, is it going to be this fib or the mid band, or is it going to be these one-to-ones? So on the NASDAQ, one of the things that you're going to realize, Rakesh, is when these small triggers turn against you and they're close to the area, you have to be patient. If you take the close on the correct side of the small triggers, it eliminates getting run over probably 60 or 70% of the time. So this is what we were looking at here. You had weak triggers, but a clear path. Let me let this finish loading. And you just didn't know. No, I'm not saying focus on the small triggers. Start with advantages on the large chart, right? Let the large chart say that you're probably going up first. So let me find a picture. And I've got this, Rakesh. Let me put it in the room. If you've never looked at it before, I put this in the room all the time for you guys to steal. But I put a lot of thoughts on NASDAQ in there. So let me open this up while the chart wrote. These are my entry thoughts, Rakesh, and let me know if it helps. The large chart rules never change. I want odds favorable momentum, and I want a clear path, especially on NASDAQ. Smokus. And then the things that I look for on NASDAQ for entries, Rakesh, is when the reversal bar happens and I'm looking for an entry because the large chart says, where are my small triggers? If they're below my reversal bar marker, I'm waiting. If they're above the reversal bar marker, in this case for a long, I'll get in at the area because it gives me time to manage. So if we look at your picture, those small triggers were railing down. There was no room to them. This is where I'll wait for a close on the correct side. Because the reality is I did have a clear path, right? But I didn't have a lot of momentum. And then if I come back, actually, and yours was probably around there. Let me see. I'm not sure where your picture was. Probably, I thought it was this one up here. Maybe that. Let me see where your retracement's coming from. Your retracement's coming from 22 and a quarter, which means this is your retracement. Anything can happen, triggers, in weak. So Rakesh, this is where you ask yourself, is it going to continue up from 1278? Is it going to continue up from here with those weak triggers? Or is it going to keep pushing further? And you don't know. But if you waited for a close on the correct side, it at least gave you a fighting chance. And then by that time, it's game over. It's lights out. It's no fun. It's done. Does that make sense, Rakesh? Does that help a little bit? So when I'm looking for my entry, you also had three divergences in the same price range, which says don't go long. But see how when price gets to support, look how close the small triggers are? That's a patience piece. Are you listening? Is anybody listening? Other than Ron making fun of me stringing words together? Cool, just making sure. Look how close. And guys, this is kind of NASDAQ exclusive. Rakesh, this look right here says don't do it. It says be patient. And you don't get anything that isn't fighting the small triggers until right here. Does that make sense? So the rules over here are exactly the same, but over here you can use those small triggers just to help out a little bit. Same idea here at 1031. If you were saying to yourself, everything is up and the path is clear, right? I'm not sure if the mid band's right or not. Small triggers are down, they're close. If you just wait for the close on the correct side, because Rakesh, on this trade, you might have been waiting for fibs. And that close on the correct side says, all right, it's going to be the mid band. There we go. And sure enough, it takes you all the way up to the next areas. So NASDAQ is a different animals. The advantages are there, right? Now we have a pivot stop out with no triggers through, but I can't go short into support. Guys, if you're not comfortable with your plan, NASDAQ will kill you. S&P is doing the same thing, though. Now we're in a downtrend, but the large are up, but the smalls are down, but the smalls are all above this fib, right? Oh, it's just ugly. I don't have any rules met. I've got plenty to form an opinion. There's your 50-50 with a couple divergences. No way, not doing it. Then price pulls all the way down and smacks its head into resistance, but the larger up and the smaller down. Guys, the idea that you don't always have to be in a trade is difficult. The idea that the only thing that you need to do is wait for your advantages, and that's the four-letter word, is wait. I have to wait. I have to wait for the best of the best. My money is worth the best of the best. So before I get into my second break and we do this, I want to reiterate how important this is to you guys that are sitting on the sidelines watching everybody else dance. Um, the quickest path to getting to where you want to be, to minimize your learning curve. Post pictures of your trades in class. Every trade, win, lose, or draw. And guys, not just pictures of your trade. Dave's trading. If you're working on termination conditions, show me 10 pictures of termination conditions. Let's make sure you have the concept, right? Freddie, maybe you're wondering about entries. Go back, circle those tails, look for entries. Write your rules on there. Bring them to class. You don't have to take a trade to get the education. All you have to do is post. All you have to do is present something to me, and we'll have a talk about it. But I want to see every trade that you take, especially the trades you take, win, lose, or draw, because if you win and the rules are wrong, you may have a short-term victory but a long-term failure. How do you know the difference? To be sure, you need feedback, guys. We're here to help. I'm here live 15 hours most every week. The only thing that I'm doing is waiting for you to show me a picture so we can have a great talk about it, so we can talk about the rules, the advantages. Um, if you place a trade on the simulator, right? Monopoly money, if you participate in class, guys, there is no risk of loss. There's no capital involved. Nexgen gave you the software. Nexgen gave you the platform through NinjaTrader, right? Nexgen's providing you the education. Nexgen's giving you the plan. Guys, the only thing that you're investing right now is time. And if you're not willing to invest the time, you're probably not going to get the results that you want. So you need someone to tell you what you did right or wrong when you're new, guys. It's part of the educational magic. I'm here every day, and I am the warm, fuzzy Novak. Trust me on that. Just waiting for it to all agree. And then I'm going to give you a couple gifts, and I'm going to take a little break, guys. This is, hey, PFI, have a good one, man. This is 7 Habits of Highly Successful Traders. This is written by the late Mark Douglas, who is an absolute guru in the mental side of trading, reminding you that it's about your execution, right? And that you're powerless. There's also so many great videos on YouTube of him doing lectures. John always tells people, read that every day for 30 days. This is my most recent read. Emotion-free trading, guys. Emotion-free trading comes very much from realizing that you're not in control of the market. There's so many great things in that emotion-free trading. Highly recommend it. I'm not being paid for the endorsement, um, but is that it? I'm not sure. Let's find out. It was written by Larry Levin. But this one snippet was so important to me that I really wanted that I took a picture of it. And it says that this exercise is not going to be easy. So you must be easy on yourself, guys. And this is one of the biggest things. I see you guys beat the hell out of yourselves all the time. The more accepting that you are of your mistakes, the easier it'll be for you to make the next attempt. Um, D Soap, can you show me a picture of what your charts look like real quick? And I will do everything that I can to help you out. Guys, don't beat yourself up. Encourage yourself. Support yourself. Pretend like you are the one person in this world that you love more than anybody, and they're learning to trade. And treat yourself accordingly with your language. Traders tend to beat themselves up, and it's always counterproductive. So, DSOAP, is it gray with absolutely no indicators on it? What's it look like right now? And that'll give me a little idea. Hey, look, guys, terminations for the win again. Do you believe it yet? Do you believe it yet? All right. Charles O., where was the entry for the long trade? It's a trick question. Where was the entry for the long? Or on the same token, where was the entry for the short? There just wasn't, right? The rules weren't met. So D-Soap, things that I do. I know you're typing up a storm there. The first thing I do is when I open it up is I make sure that I'm connected. There wasn't. Charles, it was a trick question. Check it out. Straight into resistance, no triggers, there was no long. Jerry, I use two charts for everything I do, my friend. Two charts for everything I do. I'm a firm believer that the more I have to think about, the less it works. Hold on, no triggers, gray background. So DSOAP, Discord is different than NinjaTrader, right? I don't know what a Hakanasi bar is. These bars, you have the Renko bars, but you don't have any indicators. So let's try this. Do me a favor. DSOAP, I want you to right tick, right click. I'm going to get there. It's one of those icks. And go to your data series. And do me a favor, DSOAP, where it says days to load under 10, change that to 9 or 11. Either one is fine. Let's see if we can trick it to eliminating what may be a corrupt tick of data. Does that make sense? Right click, data series. From data series, change your days to load to either 9 or 11. It depends on the symbols. Let me know if that helps, DSOAP. Usually that gets you where you need to be. Charles, are you talking about for the software or for like the symbol itself? Let me make sure I understand the question before I start rambling answers. And then Charles, there was no long, and then price reaches support, no triggers are through, no short yet. The symbol itself, um, I don't know a lot about. I mean, they're all different. They're all different markets. So I don't know that there's settings for them. Are you talking about in regards to Nexgen? Sorry, sometimes my brain goes, oh, okay, so let's do this. Let me answer it like that. And then D-Rock, I'll get to yours. So Charles, the idea is that for the high probability trend trade, we're going to use large chart, small chart, right? The large chart and the small chart have absolutely reset all historical data. That helps too, Chef. Cool. So DSOAP, no, that's no confusion. Guys, always feel free to jump in. This is a great community. So Charles, whether it's NASDAQ, S&P, gold, crude oil, Apple stock, Tesla, whether you are hedging your soybean fields, large chart, small chart. The large chart doesn't know if it's the NASDAQ, the ES, crude oil, or gold. It has absolutely no idea. And the cool thing is the large chart doesn't know anything other than what the indicators say. So odds favorable momentum on the NASDAQ is the same as odds favorable momentum on crude oil, is the same as odds favorable momentum on the S&P, on gold. Um, Odds favorable momentum will always be odds favorable momentum. Terminations will always be terminations, right? So the cool thing is, Charles, is watch this. If I take the identifiers off, whoops, let me hide that. You can't tell me what market this is, right? Nobody can. But what can we do? We can still identify this as a termination condition. We can still identify this as a termination condition. This is still odds favorable momentum. So it's pretty cool. And this is kind of the way that my brain works and how I've always tried to teach this class is eliminate all the things that don't matter, right? Don't worry about. Chris L was asking how many ticks creates an order, or how many orders create a tick, and it was an awesome question that I couldn't find an answer for. But it had nothing to do with whether or not I was able to find success, right? Whether it's bulls or bears, I don't know. I forget all the time. Bulls are up and bears are down, right? If I messed up the language and I said, hey, check it out, we're in a bear market, would that change the fact that I have odds favorable momentum? Or would it change the fact that there's a termination condition? Not a bit. So I try to very much, God, terms for the win again. Charles, I try to eliminate all the things that don't matter to me, all the things that don't fit in with my rules. Sometimes people will tell me, but Mark, the fib turned red. I don't have a rule for that, right? All I have is trigger line location. All I have is odds favorable momentum. That was an awesome question. And it goes back to exactly what you said. Just follow the rules. Let that be your commitment. Follow the rules. So price just reached resistance and absolutely no trigger lines broke through. Am I going long here per the rules? Hell no. Even with odds favorable momentum, when I reached 1, 2, 3 areas and the triggers didn't break, am I going short here? Absolutely not. What I'm doing is I'm waiting for this stupid crude oil market to sort itself out so I can have an advantage. Small triggers above the large triggers, but there's divergence on a 50-50. Egads and little fishes. It just ran your ass over. Pardon my French. And none of the triggers broke through resistance here, which means that I'm not looking for the long. It really can be that simple, guys. I promise. You just have to let it be. And that's how quickly I just read 3 different markets to see if my rules were met, and none of them had my rules met, which means I'm going to do nothing. Bad bottom, odds favorable, clear path, 2 divergences doesn't change it. Would have been stopped out. D-Rock, you're absolutely right. That's crude oil, right? When was the last clean out? Because I had a big 61 fib there. When was the last time you cleaned out? Oh, because you're in the different time frame. 2 weeks ago, but you're trading a different time frame, which means that you have different fibs. Yeah. Man, I'm in Central Time Zone today and it makes me happy. But I still have my computer in Eastern because I want the same midnight as Nexgen. It just makes it easier in class, I think. So, by your rules, absolutely. Rockstar. Beautiful. By your rules as well, you should have been into this short, right? What happened here at 9:31 with odds favorable and a clear path? That was beautiful. And I think that's the one that the Eastern guys didn't take because it was into a termination. So it's a bitch goddess, D-Rock. It gives with one hand and it takes with the other, right? So just pick your setting and stay with it. It's a great look. It was a great look. So you're having trouble opening a live account with NinjaTrader. Support's trying to help, but you saw this trade you would have entered if your account was active. So you don't have any entries exit. Okay. Man, NinjaTrader takes usually 4, 5, 6 days to get it together. So like you're gonna want it done yesterday, right? Here's my money, give me an account. It takes about a week. It usually does, D-Rock. I think my wife's took like 7 days to get it done. Mine was so long ago, I don't recall how long. And then Charles, the negative white numbers are a byproduct of the calculations for divergence. Um, so when divergence is true, you'll see the negative number print, and your brain is going to want to give them some weight, right? 56 has to be better than 23, right? And 23 can't be nearly as good as 51. I know I did. Guys, these negative white numbers are like ash when you burn a piece of paper, right? You're not worried about the ash, it's the fire that you need. So um, when the line prints, the negative number will print as well. But Charles, it doesn't mean anything at all. Divergence means that there was a loss of momentum, and that's just one of the things that your software can't do away with. So it shows it because when it calculates divergence, I'll go back to it's kind of cool. If you go to the glossary of common terms, all divergence means is that these MACD BB indicators they're behind the scenes. You don't have to do the math. It used to be that next gen users had to do the math. When these are trending higher and price is trending lower, you're losing momentum. The negative number prints, but John told me, and I'm telling you, this is, you know how you hear something and it sticks? John told me, he goes, there are no degrees of divergence. It's like being pregnant. You either have it or you don't. You either are or you are not. So look for the lines. If the lines print, you know there was a loss of momentum. If they don't print, then there wasn't. And it really is that simple. Dave. Odds favorable, no divergence. You take it right above the areas inside of favorable large triggers, and you exit right at the problem spot. Dave's trading. I know you're new, right? Can we talk about everything on here? And Dave, I know you've been here long enough to hear my lecture on annotating the charts with the rules, right? So, took the heat doesn't tell me a lot, right? So let's do this. Rule number one says odds favorable momentum. Whoa, that's some huge font. Hold on. And the reason that I do this, Dave, and I love your trade, let me be very clear about that. Sometimes people think when I talk a lot about their trades, it's because I don't like them. It has nothing to do with that. It's just the idea for me is that I want you guys to have consistency. I want you guys to always be able to recognize odds favorable momentum and to understand that it gives an awesome advantage. There we go. That'll work. Oh, hey, Charles, have a great day. Thank you for being here. So you had odds favorable momentum without a question. And then you also had one of those 50-50 looks, David. Dave, sorry. The large triggers were below and the small triggers were above. Did you recognize it? And then, let's just go to your picture. See how price hit the midband here? So 50-50, Dave, means that the smalls are through the area, but the large are not, which means that 62 is not broken yet. It means that you don't have that clear path yet, which means that this isn't a high probability trend trade. But your momentum is outstanding, and there's a lot of things that went really right on this one. When you hit this midband, see how price pulled all the way back to those large triggers? It had room to make a reversal bar before it smacked into them. And the bottom of that bar is this right here, all the way back right at those large triggers. Do you see it? This is what we call the gap theory, guys. This is when midbands create problems for us. When price hits a midband and the large triggers remain a full bar away, it's likely to close the gap back to those large triggers. This is our gap theory. And Dave, you may not realize how well you did taking this trade. So it did exactly that. It snapped back and it closed the gap. Notice how that snap back to the gap is right there at areas, right inside of favorable large triggers. We don't have a clear path because the large haven't cleared the area. But you didn't forfeit divergent, you didn't forfeit momentum, and you didn't forfeit an area inside of favorable large triggers. Your entry, David, is here right above the one-to-ones, save you a couple ticks. And then your stop was in the perfect spot. It was where the market shouldn't go, on the other side of these large triggers. And your exit is brilliant, right where the market has the potential to stop. So the idea that you traded with the trend, that you traded with the momentum, that you waited for the pullback, and that you gave it areas to bounce off of, I know you're about a week in. It means that all of this is soaking in. It means that you're focused. And then we start talking about things that kind of change the look. See up here how the small triggers have broken through, but the large triggers have not? This is the same look. That's that 50-50 look. But I want you to see the difference. Here, we gave up momentum through divergence, and this one doesn't work out. Here, we did not give up the momentum, and this is the one that carried you up to the next area. Awesome picture, dude. It's a great trade, and it's from the right spot, and the advantages were solid. So welcome to Nexgen. Look at this, guys. Term to term to term. There's that range-bound market, guys. Crude oil's trying to figure out what the hell to do right now. The NASDAQ, on the other hand, is screaming to the upside. It broke through all those trouble spots. And the S&P is doing the same thing, guys. Odds favorable, smalls above the large. Larger wide, angled in the direction of the trend. I've cleared my area, haven't reached the next area. In the event of a pullback, I have an order waiting right at an area inside of favorable large triggers, guys. This is where you take a picture. This is what we call a pre-trade picture. So why are we annotating charts? Guys, give me a Y or an N in the room. Do I have odds favorable momentum? Rule number one. What do you guys think? Anybody? Absolutely. Do I have a clear path? Rule number two. Haven't reached an area and I've cleared the other, right? That's my first two rules. Do I have an area inside of favorable large triggers? Let's write it out so we're reinforcing. That's a yes as well, guys. This entry represents the point where the market is most likely to continue. Odds favorable, clear path, area inside of favorable large triggers. So Rakesh, when price reaches resistance and no trigger lines break through, it's a termination condition. When both the small triggers and the large triggers get to the other side, now it's a clear path. Price hasn't reached an area above me, and triggers have cleared the area below me. Does that make sense? And just so you have one for your files, there's a picture of both scenarios. But remember, it's not just the clear path, right? But right after it, we have a big red fib. So what's the recipe for a termination condition, Rakesh? Price reaches an area, right? That's what has to happen. So Rakesh, if price has not reached the area, it's incapable of being a termination condition. So if it's not a termination condition, you know I have a picture for it. If it can't be a termination condition, then we're going to call it a target. If I get a pullback to an area inside of favorable large triggers, Rakesh, this represents my target. Because if my entry's at 0950, this is still 5 points off in the distance, isn't it? Does that make sense? The same way, Rakesh, this red fib, if you entered somewhere down here, was a target. You were working on it? How did you take that trade, Chef? It hasn't reached an area inside of favorable large triggers. Did you take that 50-50 trade? Let's see what you did, Chef. So, Chef, where's your window, bud? Is it the triggers or is it the areas inside of the triggers? So this is why, again, annotation. Where is your stop, Chef? Isn't it right at an area inside of favorable large triggers? So isn't your stop where your potential entry should be? Not at all where the market shouldn't go. Does that make sense? And I hate to talk about trades that are in the works. But the rules-based entry is 0950 at the areas inside of favorable large triggers. Does that make sense, Chef? It doesn't mean that your trade is doomed, but it means that your stop has to go where the market shouldn't, right? And because you jumped in so high, you may have to sweat through some stuff. But you still have odds favorable momentum, and you still have a clear path. Your large chart still says this market's likely to go up. Doesn't make your entry wrong, it just doesn't make it the highest probability entry. Good. I always tell people, guys, crude oil's still stuck in a range. NASDAQ's trying to figure out what it's going to do. S&P is the only chart that says, Chef, man, I always tell people, I did this when I was a personal trainer as well. My goal is that you fire me. My goal is that you get so in tune with your plan that you don't need me anymore, that you come and hang out because this is fun, right? Not because you need the feedback. Um, and Chef, that's exactly what you're doing. You started going after your own charts. You started applying the rules, and you're giving yourself my feedback, right? You knew what I was going to say. And Rakesh, will you let me know? No firing. I love it. Rakesh, did that make sense on that big red fib? That it's not a termination? It is, in fact, a target? Okay, cool. I just looked up and I was like, oh man, I don't know if he answered me. Oh, they're dancing, aren't they? They're dancing. That fear of missing out is becoming overwhelming. But my rules say that I have to get in a tick or two above the area of support. So if this one goes from here, probably not my trade because it doesn't fit my rules. Your rules may be different. I'm comfortable with whatever your rules are. And then Rakesh, do you see how the small triggers here kind of act as resistance as it pushes down closer to the area? You see this a lot. Oh, yeah, D-Rock, I was with you actually. I forgot for just a second that you were in a different time zone. Rakesh, this is a pretty good example of how the small triggers can act as resistance. And now since there's three divergences, you may choose not to take that trade. And then there's our pullback. Because it was divergence a tick away from support, so you chose not to take it. Technically, the rules are still met, right? And with this much momentum, you've got a pretty good shot. Didn't reach it. The bottom of that bar is a few ticks off. It's only two divergences, but look how strong everything is, D-Rock. When I'm making a decision about a tick or two off, I'm gauging momentum, right? I'm gauging where it came from. And with this much momentum, man, it's likely to at least retest. So I like it. Oh, look at that. It overran to the mid-band a little bit. What are we waiting for on this one? We'll put our stop where the market shouldn't go. If it comes down here, we don't want it. So where's my first target? If I'm in at 950, I only have to get to 1150 for my $100, guys. If I get a reversal bar here at 11, I can reduce my risk even further. Do you guys see it? You had to sit through a little. And if you would have just entered where your stop was, did you leave it there, Chef, even after all the conversations? There's a reversal bar. So now I've got a 1.5 on this trade. With odds favorable, with a clear path. 1150 is $100, but let's see if it goes to the fib, right? That's super pragmatic. There's your first target. That's super pragmatic. 1150. There's your second target. Give me a Y if you see what happened. We took the pre-trade picture, right? We've minimized our risk. We waited for the pullback. You just hit your first target, which means if you're that super pragmatic, you're now break even with $100 in the bank. You're looking for 200 and you're powerless. And this target represents, with this momentum and a clear path, where the market is likely to go. So Rakesh, it goes back to the idea of that fib being a target. But if you're brand new and you're trading the KISS plan, guys, you already have $100 in the bank. You have no risk. As you grow with the software, you may say, I'm okay leaving a little risk on this trade because of odds favorable momentum, because of a clear path. Eventually, your plan may change a little bit. It's fun when we do these live. It already hit your first target. I don't know what's going to happen, guys. I'm not in control. But I do know that if I hit my first target, there it is again, just in case it didn't fill the first time. If I hit only my first target 3 times a day and get stopped out break even, that's still 72 grand a year. That's still a $1,500 week. So what would it take to get out of this trade? If I'm break even, it would take coming back to my break even. Or it would take getting my stop hit. Or it would take a third divergence in that same price range. So if divergence prints, which will happen on the third bar, I can put a stop 2 ticks behind that reversal bar. If divergence prints, that's the third one in the price range. I may not want to be in that trade, right? We'll see what happens. So I'm going to put my stop. So Chef, you left it even though you knew that it was the area inside of favorable large triggers. Oh, Chef. Did you learn a lesson from it? And then even more so, here's the second part of the question. Did you re-enter the trade because your rules were met, or did you decide since you took the loser that the trade was over for you? That's hard to do sometimes when the rules are met and you make a mistake and then you realize the mistake because the rules were still met, right? They're making you sweat it a little bit. So let's go through Management 101. Guys, what does the large chart say? That's okay. Large chart says up, right? Large chart says clear path. Large chart says we're likely to go to the next area. Small chart says that you're already in. Nothing else has changed, right? Nothing else has changed in this trade. The large chart is still up. The path is still clear. The small chart still bounced off of support. The stop is still where the market shouldn't go. A lot of you already got paid, but what you're watching are those fluctuations on a smaller, faster chart, right? It may go up and down 1,000 times before it does what it's going to do, whether that is up or down. How difficult is it to watch those ticks? Those ticks are in your brain a reflection of failure or of success. There was your re-entry, Chef, at the area of support inside of favorable large triggers. That feels like another reversal bar, right? I'll go 2 ticks behind it. I've got 50 cents risk on this, guys. I have 2 ticks risk. I still have odds favorable to the upside. I still have a clear path to the upside. I've already been paid. But look at that. You would have been stopped out break even, and then it would have ran without you. I told you that was going to happen a lot, right? That represents a $200 trade right there at 13.50. Guys, do you hear how calm I am as I talk through this? I'm calm because I've seen it 1,000 times. You're saying that you have very pragmatic rules, but Chef, here's the thing though, is you broke your rules both on entry and on stop placement. But if you go back to the rules, your rules were met 100%, weren't they? Now, if it hit your first target, that's a good reason to exit. Your predetermined target. So it's kind of two different options. In the beginning, my target is 100 and break even, right? Because I don't know how to manage the trade. As I grow with the software, I still have odds favorable. Yeah, I still have a clear path. So your plan may change a little bit as you change a little bit, as you grow, Chef. I love being pragmatic in the beginning. I love absolutely no thought process in the beginning. Isn't it awesome though? Every one of you in this room, if you followed that KISS Simple plan, made at least $100 on this trade. Every one of you, if you're following the KISS plan, got stopped out break even. Some of you said, my rules are still met 100%. Always. Always crashing, Snorri. I'm sorry. And they got you for the damn. I can say it because I'm on a microphone. And then, Paul, did you say you're still in this trade? Still in it because of odds favorable momentum and a clear path? I would too. I would have been paid on my first contract. Chef, I'm a lot like you. I love to get paid. But the cool thing is, if it hits my stop, I still make money on the trade, but I still keep my stop where the market shouldn't go. But how long ago do we draw that green box? 10 ticks for the first target. Oh, boy, that was a big jump, wasn't it? Oh, you guys just made $300 on this trade. So a lot of you made 100 and got stopped out break even. If you've grown with the software, you made 100 and 200, right? Can definitely put my stop where the market shouldn't go, outside of areas inside of favorable large triggers. Yeah, Snorri, every now and then it gets a little sensitive. So guys, pragmatic, you made $300 on this trade. So now we have to ask ourselves, what does the large chart say? Does large chart say up? Does large chart say momentum? Does large chart still say a clear path? Look at that bar with the tail on it. Where did the tail form? Oh, that's support inside of favorable large triggers. Guys, I love it when this happens live because it's easy for me to go back and find pictures of it, isn't it? It's easy for me to bar by bar on historical and look at all that. Look at what just happened. Guys, you're watching this live. This is what I teach every morning. Every morning I talk about odds favorable momentum. Every morning I talk about a clear path. We'll see what happens. They may push a little lower here. They may not. My small chart triggers are weakening the large, but they still angled up. Uh-oh, there's two divergences. That's a pivot stop out. That mid band's right at the bottom. This is where they're going to make decisions, right? Are they going to retest support? Are they going to come take my money? I don't know. Paul says with momentum and a clear path, he still has a good chance. So Paul just added on. Paul said that's still support inside of favorable large triggers with odds favorable momentum and a clear path. Watch this. If I sell one, that represents $100 on my second contract. There we go. Just got paid on that one. Just double dip, didn't we? I love this stuff. And now at this point, with weak triggers here, a third divergence takes me out of the trade. So I'll put an appropriate stop there. Thanks, Paul. Do this every day, right? Did the large chart ever change, guys? This is what I want you to realize. Did the large chart ever stop having odds favorable momentum? Did the large chart ever stop having a clear path? No. How difficult is it to sit here calm and believe the large chart? It takes a while, doesn't it? And now, since I have two divergences already, my stop will literally be 2 ticks behind this reversal bar. So I'm either going to hit my target or a third divergence is going to take me out, which means that I have zero risk on the trade. Guys, you hit your 100 target twice. The rules for a trend trade have already been met twice. This is the, oh shit, I forgot my Nexgen users. Let me go grab them. Are we going to hit the target? What do you guys think? Paul thinks we will because of odds favorable. Tony's a little suspicious because the smalls are below the large. Dano says it's likely. I've got no risk. I could have made 300 on the first one, right? and then just taking 2 here, and then getting paid again, up $400, and that final runner. Guys, the calmness in my voice isn't because it's simulator. The calmness in my voice is because I've seen this 1,000 times. Because I've seen this trade set up. I've seen that entry in my brain 1,000,000 times. And if I go to this, let's look at what the perfect long looks like. Perfect high probability trend trade long. Well, it looks just like that, doesn't it? Looks exactly like what we just took. So I want to ask you guys, give me a why. We know that it works, right? Just have to learn how to work it. We know that elliptical will make my jeans fit again if I just get on it. I know the only diets that don't work, guys, are the diets that you quit, the diets that you don't follow. I did re-enter on the second pivot, Snorri, because my rules were still met, right? This was 100% rules met. This was 100% rules met, wasn't it? It was still odds favorable, and it was still a clear path, and 2 divergences don't scare me out of these advantages. It takes 3 divergences. So until I get 3 divergences and my large chart looks like this, man, it's go time for me. I have to. I'm obligated. My rules are met. And it's still going. Congratulations, guys. You just double dipped. You could have just made $600 in that little area. So does it work? You're damn right it works. Show me your pictures, guys. The only thing that you need is experience. So if you're on a demo, this is what I teach every day. You just watched me do it live in front of God and everybody, right? Go ahead and call your salesperson and tell them that you want this stuff because you're committed. And I'm going to do this as well. Oh, Charles isn't here. I'm going to do this. Yeah, and patience comes from experience, Chef. Guys, you can't tell if this is the S&P, if it's crude oil. You can't tell if it's NASDAQ. You don't know if it's gold. You don't know if it's soybean or silver or the Japanese yen. We just trade patterns. We trade patterns. We trade the idea that odds favorable momentum and a clear path is the recipe for finding a retracement on a smaller, faster chart. Every day, guys. And then Paul says, in this uptrend, Paul has a target at 22, Paul, for that final contract, saying just in case it runs, why not make a metric butt ton of money? At 21, just below it. And at this point, if this area is going to break, it's going to break, right? You're not going to give it all back. Paul's saying, I sure want it to go. Everything says it's going to go. Why don't I let a reversal bar on the smaller, faster chart take me out, right? Or let me give it room to do it. I don't know what your plan says, Paul. But if you're in at 950 and you can't do worse than $200 on your second contract, guys, trailing stops. Make it appropriate, right? The area is not broken. The triggers aren't odds favorable. If it decides to run, let it run. But if things start changing, don't give back $500. Or give back $500. Whatever you want to do, it's up to you. So who's new in here? I know I've got some newer folks in here. Did everything that we just talked through on this make sense? why we waited for the pullback, why Chef's stop shouldn't have been at support inside of favorable large triggers, why we didn't panic. Because of fluctuations on the small chart when the large chart said go. Guys, it's easy for me to do this calm because I've got nothing at stake, right? I know that it works. I've done the math. I've done the study. I've gone through it. I've filled up 1,000 spreadsheets. And it made the target twice. Nice job, Anthony. Did you take the trade because I took it, or did you take the trade because the rules were met? Do you understand the rules that got you in? That's the most important thing for me, is do you understand the advantages? That's what I want to see every time. I entered this trade because my rules were met, not because I wanted it to go up, or not because I need to buy a new lawnmower, just because the rules are met. 6 signs you're maturing as a trader. Guys, number 1 says that you manage risk and then you manage reward. By waiting for that pullback, you are able to manage risk. By having odds favorable momentum and a clear path, you are able to manage risk. You're completely relaxed because you're maturing, guys. I was completely relaxed because I understand the advantages that were in place. I understood where the market was likely to continue, and I knew where it wasn't supposed to go. So I had a stop in place. I didn't force it or chase it, right? I waited for the pullback. Looking at you, Chef, looking back at me. Here's a big one for you guys. Trading's not your daily adrenaline fix. Trading should be boring. I don't have automatic stops, Anthony. Let me get through 5 and 6, and then we'll talk about the ATM strategy. Follow your trading plan, guys. This is the key. This is the hardest thing to do, is to do the same damn thing every day. And then, guys, this last one is huge. Your worth as a trader and your worth as a person are two separate things. This is just warm, fuzzy, touchy-feely Mark coming at you for a second. Don't beat yourself up during a learning. You're going to make mistakes. Just accept that you're new. Give yourself some grace. You're going to be fine. Do you have an ATM strategy in place, Anthony? So like on NinjaTrader 8, Nexgen gave you, let me go back to it, and I'll show you. I'm going to go to the software user guide and ATMs. When you download the software, there's all of these. These are your stops and targets. 1 lots, 2 lots, 3 lots, 4 lots, 6 lots. These are all downloaded and preset for you. So if you go to your entry chart, Anthony, what market were you trading? The S&P? So the S&P, a 2-lot, 12-point stop, or 12-tick stop, and that's reaction time to give you time to put it where the market shouldn't go. And then this is set in at 16 and 24. $100 and $200 would be 8 and 16, not 16 and 24. That's a little bit bigger, which is cool. There's one for crude oil, $100 and $200. But if you go to your drop down and you click on that 2-lot 12 stop, what it'll do is it'll give you every time you enter the market. So for example, shouldn't do it, but I'll sell it for grins. It's going to put your stop in place, and it's also going to put your targets in place. And guys, this is financial suicide. I'm fighting everything, but I wanted to show Anthony, if I click on my stop, I can put it where the market shouldn't go. If I click on my target, I can move it to where I'm anticipating the market to go, or where I'm looking for that $100 to be reached. And if it hits my target, it'll pull me out of the trade. Or if it hits my stop, it'll pull me out of the trade. That's perfect. So that's 2 contracts, 12-tick stop, 20 and 30 are your targets, and those 20 and 30 represent ticks. So on the S&P, 20 ticks is 5 points, which is, let me do my math, $250. So on the S&P, if you enter at 13, $100 is at 15. It's only 2 points away. That's 8 ticks. Guys, you see how it's weak triggers and not broken? Third divergence. It may still go up, but the advantages are gone at this point. The advantage of momentum and a clear path are gone. So Anthony, make sure that you have that in place every time you enter a trade. We don't stream live, Edwin. I keep it private until after class, and then I'll publish it because I want you guys in here, right? And when you stream live, it opens up for all the bots that'll come in, all the porn sites that'll come in. And there's always some jackass that didn't want to follow the rules. And he gets into there and he's like, Nexgen is full of crap. I didn't do any work or study it, but I wasn't a millionaire by the end of my demo, and it's all snake oil. Guys, I want you to come in believing that it's snake oil. Dave's trading, Anthony, Freddie, I want you to write on a big piece of paper, Mark Novak is full of shit, and I'm going to prove him wrong. And then I want you to scroll back and I want you to start circling tails where the rules are met. And then I want you to write the full price for the software to your salesperson. Because if you go through proving that I'm wrong, you're going to be here forever. And it was all snake oil, right, Chef? It was all snake oil. Guys, it doesn't hurt my feelings for you to think that everything that I say is nonsense. But I'll teach you how to prove it. So Freddie, as you learn to follow the rules, go back and scroll, right? This is the S&P. So Freddie, let's go back together. This is what I want you to do. I want you to go back. And man, this holiday kind of got us a little bit here. Goodness gracious. There we go. 1 o'clock on maybe Monday. I want you to go back when the rules are met, and I want you to circle the tail. Tony, take care. And then I want you to open up your small chart. And this is going to be a little bit of a run, but I want you to scroll back until you find that circle, Freddie. And I want you to see that it was a pullback to resistance inside of favorable large triggers. And then I want you to see that the third divergence in the same price range killed it. And what you're going to find is that if you go back and you do the work, everything that we talk about in this room every day, whoops, happens over and over. And it's just up to you to learn it. Yeah, bring it. Scroll back. But here's what's going to happen too, Freddie, is you're going to go back, and I'm not saying that you're going to do this specifically, but you're going to go, man, all of my triggers were above support, right? All of my triggers were above support, and I circled the tail, and Mark said that this is where the trade's going to happen from. And you're going to show me this picture, and you're going to be like, Mark's full of crap. And then we're going to go through the rules together, Freddie. We're going to talk about momentum, and we're going to talk about a clear path. And that's where you're really going to get that magic. Like, I want you to circle everything that you see, right? But then I want to have that talk about whether or not it is rules-based and whether it is what we talk about and whether or not it does fit that plan, that simple plan that's provided for your highest chance of success. So yeah, man, get to work. And then at 1 o'clock, Waller speaks. Medium impact. Could move the market a little bit. That's all I can ask, right? Guys, I can tell you 1,000 ways to Sunday that this works. Prove to me that it doesn't. And then when you prove to me that it doesn't, go do something else. I'm cool with that. You won't hurt my feelings. My brother has said for 20 years, if you find something better, bring it to him. He'll buy it. True story. So, anyway, I know that sounds cocky. It really does. But guys, it sounds cocky because I've done the work. Because I've gotten the software and I didn't do the work, and I was separated from a lot of money really quick. And then I did the work, and all of a sudden, when I follow rules, me and my money hang out. We're still best friends. So, good stuff. And guys, that's it for me today.
That's weak triggers and 3 divergences at resistance. My longs are over per my plan. I already got paid twice on the way up. I already hit my daily goal. Guys, between this fib and this fib, there was $600 worth of opportunity. Which means if that's all that I find every week, that's a pretty marginal goal. 300 per contract, right? It's a $3,000 week. That's a $12,000 month. That's a $144,000 year. Cocky's good if you earn it. I agree 100%. So guys, welcome to Nexgen. Thank you for being here. Thank you for taking the time to post pictures, to ask questions. Do me a favor, get to work. Call your wife right now and say, I'm going to prove this Yahoo wrong. And then ask me how I can help you prove me wrong, because we'll walk through it together every day. I promise we will. If you have questions, guys, my email always works. I prefer participation in class, but I know sometimes schedules just get a little wonky. Don't be afraid to reach out to me or your salesperson or John Novak. He makes himself very available to you guys. I'll be back tomorrow morning at 9 a.m. We're going to do it again. I'm going to teach class one more day from Amarillo, and then we're Dallas bound. So, Miss Debbie, watch out. Coming for you. Guys, I'll see you in the morning. Take care, everybody. Be good.